Dear colleagues, we are about to start the first session of today. So good morning, everyone. And today we will have two sessions on state-owned enterprises accounting and reporting. We don't discuss very frequently the SOEs in our events, but this is the time when we will have two consecutive sessions. And I think these sessions will be quite interesting. So SOE plays a significant role in many economies, being a substantial portion of the economy and employment, as well as delivering the public services. Just to emphasize the significance of SOEs, I didn't know this figure. I can only mention that in 2018, the estimated global asset of SOEs were 45 trillion, right? So this is significantly huge number I cannot even imagine. Often being engaged in both commercial activities aimed at generating profit and non-commercial activities for fulfilling public service objectives. Improving SOE accountability and transparency contributes to the effective management of SOEs and can significantly reduce the fiscal risks and improve their performances. In this session, our presenters, Emmanuel Steinhilfer, the WorldBank Senior Governance Specialist, as well as Andrei Busuyok, the WorldBank Senior Financial Management Specialist, and Bernard Schatz, Senior Manager, PwC Austria, and the previous IPSAS board member, will present a general overview of SOEs, financial and aggregate reporting, as well as consolidation aspects. So I'm giving the floor to Emmanuel to provide the general overview of SOEs.
All right, good morning, everyone. It's a pleasure to be here with you today. And if we could start the slides, please.
Clicker.
All right, so we agreed we would start by giving you a little bit of an overview snapshot about how we think about SOEs and why we think it's important in general, but also for the public sector accounting and reporting agenda. Garrick already just mentioned the sheer size of SOEs in the global economy and cited some of the figures. It's really a big and often underappreciated player in the global world economy. Second point, SOEs are critical for public service delivery. When we use water, electricity, public transport, in many, if not most countries, they are provided by SOEs. And there's also an angle for the jobs agenda. SOEs are often an important share in public sector employment. But of course, there's also the risk of the crowding out of the private sector and private sector jobs. And finally, and that is really not yet fully understood, is that SOEs are really critical for the climate agenda that we also discussed in yesterday's session already. Here is just some figures that illustrate that a little bit. According to some estimates from Philippe Benoit at Columbia University, SOEs actually emit annually more than any single country in the world except for China. And even these figures may be underestimated a little bit. Now, why are we interested as a World Bank, as a development institution in this field? It's of course because SOEs can make a contribution to the development agenda, and we want it to be a positive one rather than having a negative impact through fiscal risk or other channels. And what we typically do is pursue an integrated approach that looks at the fiscal risk, competition aspects, the service delivery, but crucially also the corporate governance that of course includes the accounting and reporting aspects. Now here in the ECA region also specifically, SOEs are really big players. And according to some analysis that colleagues have done, it's actually the region where SOEs have the heaviest presence compared to others. Now making the link a bit more directly with the accounting and reporting, here as well, this is really a critical field that together with you, we also want to explore and understand a bit more, and hopefully this session will be a start for that. Both at the SOE level, of course, to get a better understanding of the performance and what's happening at the firm level, but then also at the portfolio level and by extension of the state, what's happening in our SOEs and especially from the fiscal risk angle. But taking a step back, and this may also be important, is just to gain a little bit of a common understanding what we're even talking about when we speak of SOEs. So there's the internationally agreed and recently reconfirmed definition by the OECD SOE corporate governance guidelines that we also broadly adopt in our own guidance, the WorldBank ISOEF, which is basically any undertaking recognized by national law as an enterprise and in which the state exercises ownership control. And now that sounds a bit technical, but often as a rule of thumb, what we look at is it's usually an entity that's legally separate from the state. That's important, that has primarily economic or commercial function, and also where the state exercises control, typically majority ownership or a significant minority share, but with some kind of control of the overall entity. Now, conceptually speaking, we typically think of SOEs as being in between the state, the public sector on the one hand, and the private sector. And again, as mentioned before, it's a separate legal entity from the state. So it's either created as a statutory corporation, meaning based on its own specific legislation, or just as any other private company under the Companies Act, could be a joint stock company, limited liability company, or something similar. Now, again, conceptually also, what we typically aim for and what's the general guidance for the SOE corporate governance is to treat them relatively similarly to private companies. The recommendation is usually that the legal forms should be harmonized and ideally emulate the form of private companies, that there should be professional boards that have a sufficient autonomy. They should be subject to the same competition rules and so forth. And then when it comes to the accounting and reporting agenda, also typically the good practice is to have high transparency standards, ideally full disclosure of annual reports, audited financial statements. The independent external audit, I think, is a key factor here as well. For the commercial SOEs, also the IFRS is typically recommended. And then what we discussed yesterday, the climate and ESG reporting is the new agenda for SOEs as well. Now, unfortunately, as we probably all know, in reality, the universe is often much more complex. There is a lot of intermediate forms between the public and the private sector. It's really a broad spectrum. And there's sometimes a lack of definition what really constitutes an SOE. And there are many different types where sometimes it's difficult to classify them. Independent regulators, autonomous public agencies, different types of establishments. And then you also have the challenge that sometimes the legal form of an entity does not really correspond to its actual activity. In some cases, you may have something that's incorporated as a company, but that actually, when you look at it more closely, is performing more social services. That doesn't operate at all like a private company. Or you may have something that looks like an SOE. I'll take the example, for instance, of the United States Postal Service, which in many countries would be considered an SOE, but for legal reasons, in the US, it's more classified as being part of the state. But then even if you look at the universe of the SOEs, more strictly speaking, what you notice is there's a large variation. Again, in terms of the legal form, you have the private sector type of companies, but you also have these statutory corporations with sometimes very specific rules and regulations and bylaws that only apply to the SOE, and which of course distinguish it then from what may be generally the practice in the corporate sector. What we also observe, and what's often a challenge, is that many entities have a mix of commercial and more social mandates, but it's sometimes difficult to tell the extent of each one because the public service obligations are generally not identified, costed, quantified, or also, and that's the link with the budget, often there's a problem with timely reimbursement of these obligations. We have a wide range of size. We have some Fortune 500 SOEs, listed global companies that everybody knows, but also very small SOEs. And then when it comes to corporate governance arrangements and also the accounting and reporting, of course, sometimes we have to tailor it to the difference. So to conclude my more general part here, just a few reflections that we have on how this could potentially be simplified and steps that could be taken at the more general portfolio level. So one is to get a better understanding really what we're talking about, the sort of an inventory of the SOE space, list of SOEs, but also a broader understanding of the public sector universe, maybe a classification of that, and linked to that, a clear definition of what actually is an SOE. Based on that, can also develop a strategy, SOE ownership policy that articulates and expresses that strategy and how it should be applied a bit more specifically. And then on the legal and regulatory framework, and then we're coming closer to the accounting and reporting, really specifying what kind of accounting and reporting standards the SOEs should follow. And again, the overall idea here being to progressively move towards similar practices to the private sector, both in terms of the legal form. Ideally, commercial SOEs should be incorporated, be more like joint stock companies, maybe in exceptional cases, limited liability companies. Also use the IFRS as the general standard for the accounting. And then finally, encourage the SOE sector also to move towards the reporting and the ESG reporting and climate reporting. So I'll leave you with that, and my colleagues will illustrate in much more detail maybe how this could be applied at the SOE level. Thank you.
Thank you, Emmanuel. Inviting Andre to continue discussion with the focus on SOE financial and aggregate reporting. Over to you.
Thank you. Good morning. So I will basically continue the discussion which Emmanuel started, and my focus will be on financial reporting and auditing requirements for state-owned enterprises, and also aggregate reporting, so that we can then move to the last part of this presentation when discussing consolidated financial statements of the government and how SOEs should be part of that. So basically, what we are looking for, why we are interested in SOE reporting, it's basically recently the government is more interested to monitor the performance of state-owned enterprises and to improve public reporting. As Emmanuel mentioned, the SOE definition has several critical elements. One is separate legal entity recognized by law. The second is control. And those who are familiar with IFRS framework, control may not always mean that it's ownership, majority ownership. Sometimes control is exercised by different other elements, such as board nominations, etc., etc. For example, there might be a company where the government is owning only 49%, but because they appointed majority of board members, they control effectively the enterprise. So the control is, and the last part is economic activities. And here I want to make a very clear distinction. Economic and commercial is not the same thing. Commercial is when the company is clearly making money, right? The profit orientation. Economic activity may not always have a purpose of making money. Economic is by nature, it's economic, but profit is not the sole purpose of these economic activities. So these are critical. So and then we talk also about preparation of aggregate reports, which emerged as a leading practice globally. And this is also OECD recommendation for SOEs. But let's not confuse fiscal risk reporting, aggregate reporting, and consolidation of SOEs into public financial statements as different things. They use similar information. Sometimes they even report similar information, but they are different things. So aggregate reporting is more of an instrument of accountability, how the government, how the state is exercising the ownership role. And it's also about transparency, so that people, citizens can see how SOE sector is performing, what is in reality SOE sector. Everybody can look at it and make their own judgment. Of course, fiscal risk is important, and this is more for the ministries of finance to be able to see how SOEs can potentially impact the budget, especially in difficult times. We all know about all kinds of bailouts or debt defaults of SOEs where the government needs to intervene. So the purpose is that the government knows and estimates such risks and creates a fiscal space to be able to absorb such risks. Then this was already mentioned that SOEs are being integrated in the public sector financial statement, and this is what Berhard will talk later today. And basically, the key message here is the aggregate reporting, public sector consolidated financial statements have different purposes, distinct purposes, but they can complement each other to improve public reporting of SOEs. So these are the key topics I will be covering: financial reporting for SOEs at each company level and aggregate reporting. So, as I mentioned already, this is the definition on the left side, and on the right side is the conclusion. This is why the financial reporting standards should be similar to those in private sector, because they are designed for economic activities, for commercial activities, and so on. And also, I wanted to remind everybody of what is the general purpose financial statements. The general purpose financial statements intended to meet the needs of users who are not in the position to require an entity to prepare reports to their particular information needs. So this is on the basis of ISB definition conceptual framework. So this is general purpose. Anybody can look at these financial statements. Of course, the primarily users are external, stakeholders, lenders, regulators, investors, especially those who provide funding for this, for the companies and for SOEs in this particular case. But the key message here is that economic substance of entities should guide determining applicable financial reporting framework. And here, I'll just give you one example. In this region, and in most of your countries who are in this room, you have SOEs according to your law, national law, but the reality is that these are not companies which are doing economic activities. These are effectively extensions of governments. In some countries, they, for example, provide services to citizens of issuing passports or car registration or often different ministries create an SOE which offers IT services to the ministry. So this is not an SOE because they are not on the market. They are serving particular purpose, and creating an SOE in this case is in fact putting the government affairs off the balance sheet. Because you put it somewhere outside, they are not subject to civil servants pay. You can pay better salaries. You create better conditions for workers, and they can do and serve particular problem. But according to the definition, they should not be an SOE. And this is why for these entities, maybe IFRS or some other financial reporting framework, which is designed for public sector, for private sector, are not suitable, simply because what all they do, they get money from the government and spend this money. That's it. And usually on the single source basis, so they're not competing with private sector. So this is why the business model, the nature of activities, this is important. These are the list of financial reporting and auditing standards. And one is a critical thing to understand here is that similarly as in public sector, in SOEs or in private sector, just using right financial reporting standards does not make much difference, because if nobody interested in these reporting standards, you will not have high quality financial statements. If these financial statements are not properly audited, if nobody is demanding them, if nobody is scrutinizing them properly, then the quality will be not as intended. This is why we have various types of standards for financial reporting. Of course, it's IFRS or IFRS for SMEs. The standards are recognized globally. In some countries, especially those in Europe, for example, in the European Union, or those countries which aspire to become EU members, you have to comply also with EU directives. And IFRS for SMEs can be used as a proxy, but there are some nuances to that. Internal audit. Good standards, good practices require companies to establish internal audit function according to Institute of Internal Audit Standards. Internal control and risk management, the famous COSO framework. External audit, we have IPSAS, of course, and these are the standards which are used in corporate sector in general, but we also have IPSAS standards. But here I wanted to mention very briefly the role of supreme audit institutions, because globally there is a variation between the role of SAIs. In some countries, only SAIs are allowed to audit financial statements of SOEs, and I think this is more about the Francophone and former colonies of France. But here, the idea is that the financial reporting and auditing requirements should not be different from private sector. So this is why the IPSAS are but even if the role is of SAI is to audit them, these audits should be clearly specified what they are for. In some countries, SAIs are, for example, relying and appointing external auditors. And I think, if I'm not mistaken, in Indonesia, Supreme Audit Institution is appointing the auditors who will audit state-owned enterprises. So they have a role, they take the audit from the companies role. In some countries, they are doing some audits themselves, and some audits are done by private sector auditors and so on. And of course, corporate governance. And in this particular case, we're talking about proper scrutiny of financial reporting, establishing of audit committees, publication of financial statements. So these are all critical elements of corporate governance which are required for SOEs. Transparency, accountability. This was already mentioned. OECD Golden Standards calls for similar requirements for SOEs as for listed companies. Some people argue that SOEs are even more than listed companies because they're owned by every citizen of the country. And here, the only nuance is that some SOEs are owned by central government and some SOEs are owned by local governments. Usually, OECD framework is designed for those who are centrally owned by central governments. But in some countries with high level of centralization, this could be different, and probably federal level requirements can be transposed also to the local governments. Transparency is not only about giving out the information, but it's also about quality, timeliness, and reliability. So you can find in public space a lot of information published about SOEs. But if this information is not audited, if this information is not scrutinized, if this information is only published on limited basis, then it's not value. We have examples in the region where you find a lot of financial statements published, but when you actually look at them, you only find in a good case a couple of forms, which are balance sheet and income statement, and maybe a couple of others, without report, without disclosure note. And when you start digging into it, you realize that in reality, this balance sheet information is not reliable. So you can aggregate, you can put it together, you can put it in a nice picture. It's not reliable simply because audits are qualified. A large portion of balance sheet is qualified. So which means basically that the information is there, but it's not you cannot trust it. So this is why when there is a phrase, junk in, junk out. If you have bad information as an entry, you aggregate it, you do something with it, and then you have the same information as an output. So this is why it's critical that the quality audits, etc., should be there, because then aggregate reporting is simply misleading. Accountability is internal accountability, control environmental compliance, and so on and so forth, and external. It's audit, publication, and also scrutiny. So publication of aggregate report, as I mentioned, is critical for accountability of the government as an owner. In some countries, these reports are scrutinized by the parliament and discussed in parliamentary session. Citizens can look at it, media can pick up on it and do a lot of information in public domain. Quality of information is measured on different dimensions, including completeness, accuracy, timeliness, and relevance. And we in the World Bank, we see a lot also in our corporate sector work that the quality of information produced by SOEs is not always there. For example, reports which I already mentioned are incomplete. There are no notes to financial statements. There is no audit report. And often the financial statements are simply delayed in publication, and in some cases there are inaccurate treatment of technical or sensitive areas. So I can give you some examples if we have time later. Financial reporting standards, usually what we recommend to countries is that IFRS are highly demanded standards. This is why you can apply and you can ask only those companies which are economically significant. So when it comes to SOEs, it should be economically significant SOE for the country. Otherwise, it's a lot of demand and little value produced out of this information. Because it's complex, recognition and measurement requires significant cost and effort, because there is a lot of fair value, as we all know, and huge demand for disclosure requirements. As you remember, IFRS book is very thick, right? For smaller SOEs, you can apply IFRS for SMEs or national accounting framework, which can be in line with either European directives or some other benchmarks. In some countries, for instance, in Albania, they have national accounting standards, but they are following IFRS for SMEs in substance, follow a lot. Less demanding disclosures. The IFRS for SMEs is a thin book and less fair value. So whenever it comes to value, historic cost is often admissible, and there is a concept of undue cost or effort. So if obtaining the information for company is costly, then company can use the historical cost. This is the basic principle in IFRS for SMEs. And NIS I already mentioned. Consolidated financial statements, very important. Recently, we had a case in one of the countries where they produce a lot of very beautiful aggregate information, but when you start looking at it, it's all based on individual financial statements. So at the holding level company, you have individual financial statement of a company, for example, in energy sector or elsewhere. It looks very nice. Holding company is doing great, but it's not consolidated because all the business happens at the subsidiary level and nobody can see it. So this is why consolidated financial statements are critical for those groups where significant subsidiaries exist. In some countries, there can be several holdings. In some countries, it's a single holding. Consolidation is critical. These are some examples of financial reporting requirements in different countries. There is a publication made by us. It's based on the survey, and you can see the list of companies which financial reporting standards are required for significant SOEs. So on the left side, you have IFRS and national or IFRS for SMEs requirements in different countries. So this is, the information is a little bit outdated and might be not exactly accurate, but you can see an overall picture here. Accountability mechanisms, audits and controls. I already mentioned that financial reporting requirements and standards is just one small piece of puzzle. You have to have all the framework around it to make sure that it is operational. Independent auditors, international standards on auditing, a supreme audit institution avoid duplication of financial audits and define the scope. What exactly the scope and the role of supreme audit institutions. Controls and accountability at the company level, audit committees, proper scrutinizing of internal and external audits, demand of follow-up actions. We see a lot of examples in countries where the audits of SOEs are done, they are even published, but nobody cares about it. So year after year, you have qualified financial statements and nobody is even asking the company to do something with it. Nobody is punishing management for it. So this is important for follow-up actions. Systems of internal controls, internal audit, I would say even more that applying proper corporate governance codes in companies of at least significant companies in the country are critical. Internal audit is part of a corporate governance code. A system of auditors appointment to make sure that auditors are appointed without undue influence by management. Because if the management is heavily involved and auditors, they can influence, and there are lots of questions on independence. And corporate governance statements. This is also a critical. If a company is required to follow a corporate governance code should not be as just a nice to have thing. It shouldn't be just a declaration that, yeah, it's a good practice, so let's aim for it. It's a good practice, but the company should be required to report if they comply with it, or if they don't comply with it, they have to report why they don't comply with the particular areas of a corporate governance code. And internal controls and internal audit is one element of this. Establishing audit committees is another one. Let's talk a little bit about aggregate reports. So aggregate reports objective is basically improve transparency, accountability as of a government as an owner. So again, this is an instrument of accountability and public transparency about SOEs for the parliament, for citizens, and any other parties which are interested. It's economic performance and financial situation of SOEs and use of public money in the sector ultimately. Aggregate report is a separate meaning from aggregation of financial statements. Because aggregate report is a little bit wider, it has a narrative part. They are often publicly disclosed, and I would say more, they should be publicly disclosed. International international frameworks also call for governments to report on the main fiscal flows from the national budgets to SOEs, particularly with respect of public service obligations. This is another important area which you might be particularly interested because many SOEs are getting subsidies in your countries. So what the international framework calls is that these subsidies become transparent. Why you pay these subsidies? Are they justified? Is it because the company is doing some social obligations for citizens? For example, if you provide internet in remote areas, which is not profitable for the company, but you still want your citizens to be connected, then the government basically needs to pay to the company because it's a loss-making business, right? For some remote areas. Or if you subsidize the transport services for citizens, again, you can do it, or you give cheap electricity to your citizens. You can do it as long as it's properly costed and the government is paying it from the budget, because otherwise the company is not able to survive. So that's the basic principle. Yeah, and I already mentioned that this is an instrument of government to account for the way they exercise their ownership role. So it's an accountability mechanism. And here is the slide which shows which are the key areas and key issues between aggregate reporting and consolidated public sector financial statements. So the areas are reporting scope, duplication, inter-SOE transactions, and related party disclosures and independent assurance. So in aggregate, we see flexibility in scope. This is managed by ownership entity. Inter-SOE transactions are not eliminated, so aggregation is simply putting together the numbers, and audit is not required. And audit is not required because usually the information is already audited, which you use for aggregate reporting. For consolidated financial statement, it's scope based on a level of control, managed usually by Ministry of Finance. Inter-SOE transactions need to be netted off, and it is subject to statutory audit already as part of public sector financial statements. These are the examples of countries which have and don't have aggregate reporting of SOEs. Again, this is a little bit old data. Some information may not be accurate as of to date, but you see that a large number of companies don't even produce such aggregate reports. Benefits and limitations of aggregate reporting. It's accessible for low capacity environments because it is created on the basis of available data. It increases the transparency of individual SOEs. It facilitates management of fiscal risk because you can get more information. It encourages consolidation of non-financial indicators. ESG was mentioned already by Emmanuel. This is more and more important these days. And it promotes governments taking an active and ownership role. As I mentioned, the instrument of accountability. Potential limitation is challenging to implement when ownership functions are fragmented. And we have a recent case in one of the countries where it's very difficult to get information because ownership function is decentralized. Every ministry does whatever they want. Coordination function is assigned to one body, but they are not able to get information from these ministries simply because they ignore them. So this is the difficult part. Related party transactions with SOEs may not be appropriately reflected. And here, it's a borderline because ISB decided in IFRS that SOEs are not related party, even though they have the same owner. But this was because China requested them not to put it in, to exclude it from the consolidation, from the related party disclosures. And it may also need an investment in staff and training for information systems and efficiency. So these are the limitations. Content of aggregate reports, I'll go briefly, that they should report on material issues, information on sustainability, governance, and achievement of public policy objectives. Information should give a full, clear, and reliable picture on the portfolio, high quality, comparable, concise, and accessible publicly. So it needs to cover economically significant SOEs and make disclosures directed to general public or the parliament. Annual narrative report should be there with information related to performance of the portfolio as a whole. overall accountability framework of the ownership entity. So ownership arrangements should be described. And this is basically, as I mentioned earlier, accountability mechanism or mechanism to report back to the legislature or other representative bodies. And here is another list of additional list of information. So forward-looking information about value creation, indication of total of the state total value of portfolio, general statement of ownership policy and how the government is implementing it. Ownership policy has to have at least two elements: is why the government owns an SOEs and how the government owns an SOEs. Organization of ownership function, nomination, appointment, boards, significant changes to boards, and so on and so forth. Key financial indicators, individual reporting of most significant SOEs, including performance, key performance indicators or KPIs as we call them, what was the target, what is the actual execution, and so on and so forth, and applied reporting standards for individual SOEs by the ownership entity when they present. So in other words, you can use different reporting frameworks for different companies, but in the report you have to mention that this information is based on these standards, this information is based on that standard, and the methodology of how you aggregate the information should also be described because users need to know it when they read the reports. Key conclusions: financial reporting of individual SOEs and groups of SOEs consolidated. This is a critical source of information. Information should be credible and available, audits and public availability. Aggregate reporting is a tool for to aggregate data and also a good accountability mechanism of the ownership function. Financial statements of SOEs and groups and aggregate reporting should be a good source of information for consolidation in public sector financial statements. And reform options, probably this is outside the scope of you because you mainly are interested in public sector financial statements, but actually many of you are involved in corporate sector as well. So basically the key elements are sound financial reporting standards. I already mentioned it can be IFRS, it can be IFRS for SMEs or other framework, audit requirements, public availability requirements. Sound governance arrangements in financial reporting are very critical because you can have all the best standards in the world and they may simply not operate if you don't have a proper governance arrangements. And aggregate reporting requirements also should be in place. Thank you.
Inviting Bernard. Inviting Bernard to reflect on the SOE accounting and consolidation aspects, also shortly reflecting on Austrian experience, because in the next session we will have more detailed reflection of Austrian and Korean experience. So over to you.
Thank you, Garik, and good to be back after yesterday's session, I think, which also nicely addressed sustainability reporting of state-owned enterprises and its impact on governments and government sustainability reporting. So we are continuing nicely the theme. It's also a pleasure to build on such excellent presentations because it makes my life much easier because I can reference to what Andre and Emmanuel already put out and presented to you. So what I want to do is I want to give you a brief overview on what is the accounting situation for SOEs in Austria, what is the accounting situation of the government for SOEs, what would be preconditions for a consolidation. So Andre just introduced this concept of aggregate reports. I just want to contrast it a bit with consolidated reports and what it could mean in terms of challenges, but also of benefits. And then again, I will dive into some of the challenges of the current system, but also the benefits, and then I will conclude with the conclusions and recommendations. So as you can see, and this actually is a snapshot from what is called the Beteiligungsbericht. I would translate it to the SOE report, basically, which is issued annually by the Ministry of Finance, which highlights that actually the federal government itself, so just the federal level, is holding more than, has more than 100 companies where they hold a direct majority share. So this is direct and it's majority share. So there's a lot of other entities where you might have an indirect share or not the majority share. And you can already see that this is an aggregate report. So you can see on the first column, this is actually revenues, which is just added up. So there's no elimination. You have actually balance sheet total in the next column, again, added up, no consolidation. And you have actually employees, number of employees, that's the third column. So unfortunately it's German, I apologize, but I think it's not available in English. So I tried to walk you through the document a bit. And the last column you have is actually expenses for personnel. And again, it's an aggregate report. And then you have a connection to the budget. So you see actually, that's the last two columns, it's payments from the government to the SOEs, and it's payments from the SOEs to the government, dividends and stuff like that. So you have this kind of aggregate report, and then actually the report dives into each and every individual entity, highlights its tasks and responsibilities, its risks, its management styles, those kinds of things. So it's a very comprehensive report. I just wanted to give you this brief overview. And you can see actually that the nature of those entities is really, really different. So you have the classical infrastructure companies in Austria, so Austrian railways, Austrian highways. But you also have in that kind of picture also museums. You have universities, because they are kind of accounted as an organization which is held by the government. But obviously it's not entirely commercial in nature, but they have a commercial aspect, right? So if you go to the museum, you have to buy a ticket. So there's some economic activity, commercial nature, I would say, but it's maybe not overwhelming. So it's not a big criteria in Austria whether you have fully a commercial picture or you have just a share of a commercial picture. You will be considered an SOE in that sense. So just to give you this brief overview, and then I just did a brief research on what accounting systems are those SOEs really using. And you can see actually that it really depends on whether you associate it with the balance sheet total or the revenue total of those entities, because then they are using predominantly IFRS. So the biggest entities, they are using IFRS, and I can tell you just from the history of Austria, the biggest driver of actually using IFRS was access to capital markets. So the idea for those entities really was that they would either go public, which they never did, or really get bonds they would put on the market, and therefore they would be required to use IFRS. So that's the main driver, and it's just a couple. It's a handful of entities really using IFRS, but they are having a dominant share in terms of economic substance, if you want to put it like that. If you go by numbers, then actually Austrian GAAP, the local accounting system, is extremely dominant, right? So most of the entities are using Austrian local GAAP. And then we have the situation that actually in some cases, there's a customized accounting framework. So in many instances, this is where when establishing the entity in their bylaws, it was actually put out how they should have to account. And that actually was usually local GAAP at that point in time with some modifications, right? So you have actually some entities who have a customized accounting framework, and so you have to take care of that kind of specialty as well. And then again, if you go below the federal level and you would go to regional level, to municipality level, you could easily add up a couple of hundreds another entities, right? And there's a statistical report in Austria which outlines all public sector entities from a statistical point of view, and they're actually roughly 1,000. But statistical purposes, they do not recognize consolidation. So if you have 20 entities which actually are consolidated into one, they would count 21, right? They would count all the individual entities plus the holding entity. That's the statistical approach. So that's kind of, just to give you a rough ballpark, it really depends on what kind of angle you use to look at that. Regarding the government accounting, Austria introduced accrual accounting and budgeting, by the way, in 2013. And at the time, there was a decision not to go for full consolidation. So that means that in Austria, the SOEs are accounted for as at equity, as it is called. So the asset you are recognizing on the balance sheet of the government is your equivalent share of the equity of the entity. And obviously, this equity can change over time. It can go up, it can go down, right? And the idea was actually to say, well, if it is going up, you can recognize that, but you would actually build some sort of a reserve element. And if it would go down, you would have to kind of use the reserve element to accommodate the decrease. And only if it's going below your acquisition, which is opening balance sheet asset value, then you would go through profit and loss. So that's the Austrian system. Yeah, there was a lot of discussions around that. But you can see actually this is a snippet of the financial statement of the government. So you have basically shares in SOEs, and you have the balance sheet value of roughly 33 billion euros, right? So quite significant, and you can see the change over time, but you can't see anything else. So this is maybe coming from my time in the Ministry of Finance and the Court of Audit. So now if you would have an interest to say, well, what did the change actually trigger, right? Why is it actually going up? Why is it going down? You would have to go into the individual statements of the SOEs and see, oh, there was an impairment in infrastructure, or there was new investments which actually made an increase into the net assets. So there is some, let's say, informational value to that. But honestly, my personal opinion, if you would consolidate and you would see your own assets, right? The infrastructure of the railways, the infrastructure of the highways, you would have a much broader perspective on managing those assets and really influencing the decision-making in the SOEs. And I think it was an excellent point from Emmanuel to say, you have to think about the strategy, the governance system of the SOEs, because they will have some, let's say, interests on their own. So we are in this kind of classical principal agent theory element where, you know, the ideas of the principal will maybe not always be the ideas of the agent, and you create this kind of conflict. In addition to that, to kind of the accounting element, you have in Austria a mandatory, what is called subsidiary and finance controlling system. So all SOEs have to submit quarterly reports where they actually give their balance sheet information on the quarter, but also actually KPIs on refinancing, rentability, employee numbers, and company-specific KPIs. And they have also to address risks they are seeing in their business model, in their management, in their operations. So they have early on sort of an early warning system to the Ministry of Finance to say, actually, we are thinking we are running into issues and we might, you know, need to restructure or whatever. So that's an additional reporting element, and it's on a quarterly basis, and it's for all the entities, which honestly also from a Ministry of Finance perspective was really helpful to get an early perspective on where several entities were going. Of course, always if they do it properly, if it's thoroughly vetted through the line ministries and so on and so forth. So you get into those governance issues. So what will be the kind of preconditions for consolidation? I think it's important to kind of go through that. So the first point really is this kind of scope of consolidation. So what kind of entities are actually under control? And this is, I think, something where we can rely a lot on the concepts and experiences in the private sector, but there are significant differences in the public sector. So for example, we had a lot of debate around if you are a holding entity and for certain decisions you need the approval or the decision-making of a local government level or a federal government level or even the parliament, do you actually have control? Or does it actually constitute non-control because you are dependent on this kind of external decision-making? And that's a big discussion we are having, and I think you can answer it in both ways, honestly, with good arguments. Another issue, I think, which would be really important, and again, it's going back to Emmanuel's point on aligning actually the accounting policies, and also Andre mentioned that. So you would have to get a common understanding of your whole portfolio on how do you want them to look at the consumption of assets, the capitalization thresholds maybe. Just to give an example, because we had that earlier on the screen, there is an entity in Austria which is responsible for real estate for the federation. So they're renting out buildings to the land ministries, to government agencies. they have a commercial perspective on those real estates, right? They want to rent it out. If you look at, let's say, the Viennese zoo, which also holds real estate, they are holding it for operational purposes, right? So they're not kind of renting out the cages of the leopards and the zebras, right? They're holding it to be a zoo. So you have different purposes of holding similar assets within your consolidation group, and you have to take care of that and see actually how to resolve those issues. So this is not a small task. And sometimes then I think aggregate is easier than consolidation because you don't run in such issues, right? But the main question really is, when do you really get a true and fair view on your portfolio of SOEs? And that's an answer you have to kind of start with the strategy and start with your governance approach. If you do not know your overall strategy and your governance approach, it's going to be hard to say when you arrive at a true and fair view. So that's really important. The same is true for the data environment, right? So those SOEs, they are not in a common IT infrastructure environment. They have all their own systems, their own also chart of accounts, obviously. So consolidating them is much harder than if you exercise control over a certain set of entities and you can dictate the chart of accounts, you can dictate the IT environment they're working under. It's much easier to consolidate. And usually in government, you might be able to do that for a couple of entities. But as I showed you on the first slide, I think it's impossible to do it for 100 entities of that size, right? So you have to have precautions on that. And maybe one point also, next step is this elimination of intergroup transactions, right? And I think a really important point here is to say, what are the big transactions? Because you can get into the details and the weeds and the technicalities of those things a lot. So for example, one of the entities was the Austrian Railway Company. So if somebody from the real estate company now takes a train ticket to get to one of the sites or to one of the clients, technically that could qualify as an intercompany transaction, right? Because it's in the same consolidation group. Would it make a difference? Probably not, right? So I think I would really urge you to think about what would be the majority transactions that would have to be eliminated to get a better picture. And honestly, you can improve from there, right? But there will not be any intercompany accounts between the railway company and the highway company, right? They're not going to provide for that in their individual accounting. So I think it's something to really take into account. Then ultimately, but this is a technicality, you would have to deal with minority interests. So if you are not holding all the shares of the entity, you would have to reflect that in your own equity, in your own profit and loss statement. So that's a technicality you have to care for. And then again, I think it's the tools and knowledge availability is really, really important. And on the left side, I just gave you just a workflow of how this could look like from a technical perspective. But again, so yes, consolidation is possible. I think it will have huge benefits in terms of better understanding the SOE portfolio. But I think, again, giving those challenges, you would have to find pragmatic ways. And it really starts with the strategy and the governance system. So if that's not in a good shape, then I think consolidation would fail because you wouldn't have a way to resolve all these challenges and opposing opinions, frankly. All right. So what would be the conclusion for the Austrian system? This is obviously a personal view, but having different accounting frameworks obviously is not easy to really come up with what is the true and fair view, right? So if I have the same assets, I have 3 different ways of accounting for it, I have 3 different ways of looking at the consumption of the asset, it's not easier to get a picture on what is actually the situation. So that's a challenge. Again, you have a multitude of players on the field, particularly if they are established by private law. Then usually management will use private law to make their arguments and also think about their responsibilities, their tasks, right? And that might create a conflict with the public interest and the public perspective on public services, for example. So we had discussions actually in Austria earlier. Probably we wouldn't have thought that we would have those for decades, but it was in the energy sector where the energy companies actually have been asked whether they have a public mandate in terms of energy security. So due to the geopolitical situation in Austria, I mean, for decades, you wouldn't have thought about that. But now the question came up, and it was really like, well, from a private perspective, I do not have any responsibilities. I have to earn money. I have to generate a profit. But if there is energy consumption in households in certain regions, it's actually none of my issue. And then the public owner said, oh, no, that's one of your issues. So there was a lot of debate, and I think it's again coming back to the good governance and oversight system to say, well, if this is a mandate, then it should be established by law, it should be defined, and all the good points Andre and Emmanuel already made. I think it's also really good to look at this kind of duality that, for one hand, and I think there was this good graph from also Emmanuel showing that there's the government, there's the SOEs, and there's the private sector. So you would actually look for some arm's length transactions from government, right? You want to establish a shield, so to say, against undue influence. Having said that, there is a due influence of governments and political influence as well. But at the same time, it can actually flip, and then actually you are having an entity which is neglecting your public service, your public purpose, because they are shielding themselves with the private sector law and the private accounting principles. So it's a bit of a tricky issue to monitor. And then again, this single line item at equity consolidation already mentioned. It is not, it's adding, but it's not a huge perspective you're adding. And again, specificities under local GAAP, for example, if you are established as an enterprise, you get some debt from the government, you get some assets from the government, then usually it's easier to measure the debt because there's a nominal value. And the assets actually are usually not measured, and therefore in many cases in Austria they have been recognized with zero, which you could argue in other systems like IFRS or IPSAS, it would not be that easy to use a zero value for an asset. Again, the lack of consolidation I mentioned. So I think it creates a lot of artificial transactions. So for example, like I introduced the Austrian railway system, obviously there are revenues from markets like ticket revenues, but there are also huge transfers from the government in terms of financing the infrastructure, financing those tracks you mentioned where they might not be profitable and so on. So it creates a transaction between the entities actually, which in a consolidation perspective, you would be able to eliminate. And we have a lot of political energy, I would say, going into managing those artificial transactions because we are missing this consolidated perspective on the entities. And then again, the focus of economic benefit, I think, really might trigger some impairments. So we had the discussions on exactly infrastructure assets. So if you're under IFRS, you would ask yourself, what can you earn with that asset? And if the answer is zero, you would impair it, right? So now you have to find a transaction which kind of holds up the economic value of the asset. And again, that might cause some issues. And the other one is really that, you know, if you're too strongly in the private sector law and into IFRS, you might see entities really maximizing the profits because that's a commercial goal and objective. And for the public real estate agency, for example, in Austria, you could argue whether that's really a useful perspective. If you're just renting out to the line ministries, you maximize the value of the rents and you pay the rents with the budget. So it's kind of going in a circle. And the question is, does it really provide any added economical value? So to conclude, I think what is really important is, and both of you mentioned that already, I think we see a lot of entities with mixed mandates. So they have some commercial nature, but they also have public mandates they have to fulfill, public service obligations they have to fulfill. And I think it's really important to be distinct in the accounting and controlling and governance system on those obligations and services. So I think it would not be a recommended practice to kind of lump sum them into one account and say, well, actually, it all is all in there. You should be able to say, well, this is the track which is commercially viable. This is the track which is subsidized, and it's subsidized by this particular transaction, and we can match that if we want to. So you get a much better picture on how to manage the portfolio of the SOEs and the actual public services they are providing. On the point, I think, and allow me to say that as a former IPSAS member, I think IFRS and IPSAS really allows you to get a very good perspective on the finances. And actually, it's not either or IPSAS or IFRS, because IPSAS reflect the IFRSs. So if you are in a commercial environment, IPSAS will give you the same answer than IFRS would give you. I think this is an important point to stress. And also, Ross was so kind to point out to me, there is also a staff document from the IPSAS staff on SOEs and some of the topics we just raised. So it might be worth to have a look there as well and reflect on that. And in addition to that, what IPSAS does, it provides you actually accounting treatments for these public service obligations in many ways. So the question on how do you account really for a transfer, for a service concession, some of the revenue, if they are holding natural resources, managing natural resources. So we find a lot of guidance here in IPSAS and also on the issues of measurement of assets I mentioned. So I can really recommend you going there, have a look and see how this would be an option to be incorporated into your reporting systems. And then the last point I think is a really important one is really this integration of the SOEs in the public financial management system. So I showed you an example in Austria how we do it in terms of reporting, how we do it in terms of accounting. But I would go actually even further than that. It's really important to see this budget impact. And I just showed you on the first slide, we have this kind of overview on what kind of revenues are coming in from the SOE sector, what kind of payments are going out into the SOE sector from the government. So this is really valuable information. And I think it's important to say that you have this kind of balance on transparency and autonomy of the entities, right? So fully integrating them, for example, into your IT systems might have big benefits for reporting, obviously, but it might create an issue in terms of independence and how you manage that and how the management of the SOEs are going to react to that. So I think this is also an important point to stress. So I do hope that gave you some flavor on practical challenges around the SOEs accounting and reporting. And I'm very much looking forward to our debate.
Thank you, Bernard and colleagues, for very interesting and very informative presentations. And I believe that colleagues now have a lot of questions, and I'm opening the floor.
Let's start. I think there will be many questions. Yes. So my first question is going just let us to understand we're talking about, by the way, not about different topics, because you today covered too many topics: governance, internal audit. 2 weeks ago in Budapest, in Pempal, we were talking about internal audit and control of SOEs and what is the role of ministries of finance in that. So let's leave those topics. It's only purely financial reporting. So my question is IFRS versus IPSAS. So as you said, there are legally, even in ministries of finance, we have training centers, we have departments which are under SOE umbrella because of the salaries competitive we need to pay or other reasons, but they are not commercial. So do we need to apply IPSAS versus private IFRS for SMEs or IFRS? How do we differentiate, and do we expect ministries of finance to do another filter, not looking into the legal cases, but into the substance of operation of those? And linked to that, my second sub-question is about using of chart of accounts for tagging, IFMIS, Integrated Financial Management System, accounting policies. Do you expect ministries of finance to issue a single accounting policy, chart of accounts, and advise IFMIS to be used by the SOEs? And how you balance the independence, private versus public? Thanks.
I think I will start, and colleagues are happy to jump in. And thanks, Arman. That's a very easy question. So maybe to kick it off, I think and this is a practical observation, right? So if you would use IFRS or IPSAS on a transaction observation, it might not be a huge difference, right? Because IPSAS will allow you to build this commercial nature of the transaction. That's 100% fine. What I observed in practice is that if you are using IFRS, it's more on a conceptual level that you will always gravitate to economic benefit and investors' perspective first, right? So you would kind of always ask yourself first, does this asset hold economic benefit? What kind of return can I generate for the investors? And then actually, if there is not a lot of answers there, because the transaction doesn't warrant it, then you're done in IFRS. So in IPSAS, you would have the option to go for service potential and build this kind of public service obligation. So I think that this is just an observation. I think both frameworks can lead you to a very similar place. But again, just from what I observed, I think companies are gravitating more to economic benefit and shareholder value if they are purely using IFRS. On the question of the IT systems and the chart of accounts, so honestly, obviously, I think if you want to have a job for life, you can start aligning the chart of accounts of 100 entities. So that's a perspective. But I guess the question is it necessary? Right? So I think it's really this kind of question on what are the big transactions. I think just to remind what I showed you was the biggest, the 100 biggest, right? And from the 100, there was the 10 biggest. And we were already in, I think the total of balance sheet value was 360 billion euros. So if we derive assurance materiality from that, and we think about what are really transactions which have significance in this system that might distort your perspective, we are really high up. So this have to be really huge transactions. So I would rather say the question on, do we have one perspective on how you use your assets, and maybe how to eliminate some of the let's say, the accounting policy choices, right? Might be even more important than really doing the chart of account. For some transactions, it might be useful, but not kind of doing it in a full perspective. And on the IT system, I would say what we've seen with the IFRS is that, I mean, you have to actually make them available in a digital format. So you have this XBRL statements you have to put out. And that's quite a benefit if you want to start kind of lining certain elements. So maybe it's not kind of an IT system as we think about it as a core IT system, but more of a web-based system where you can upload reports and then you start matching it from there. So I think the recommendation would be use the new opportunities of the technologies arising. And I think in the first day we mentioned digitalization as one of the big challenges, but also one of the big opportunities, I would say, in this field to have a good cost-benefit relation when it comes to consolidation.
Maybe just to supplement this on the question of the scope and public sector entities which have a form of SOEs, what we usually recommend to governments is to take a stock, and if the legal definition, if those entities in substance do not represent SOEs, then we suggest to change their legal status to some sort of public institution. Because in this country, in these countries or in this region, it's very difficult to put the judgment into law. You cannot say, oh, these entities have to do a judgment and then decide which standards they can use. You need to classify them properly and then basically to name them the way they are. If they are generating their revenues just by the government subsidies, then they should not be in SOE scope. So they should become some public, we call it in Russian language, there is a государственное учреждение, so public institution, which is not exactly the central government ministry. It's an institution which is created for certain purpose, but it's an extension of government. So this is, and then you can apply the governmental financial reporting rules, because it's also a big question for such entities, why they are created and what is the purpose. So they should be judged. So it depends how you're financing them on the article by article basis, or you're financing them for performance. The same applies for schools, for example, and hospitals, etc., etc. But this should not be part of SOEs because they are not doing economic activities. So I guess this is the
Yeah, very kind to give me the mic to the table. I would have been able to walk, but even after the dinner yesterday. So a couple of comments, probably, and thanks first for the great presentations and the great discussion. I think it's really interesting and valuable topic. First of all, like a little bit of a side remark, among others, I had the honor to be the member of the expert committee on drafting public corporate governance code for Germany. This code is available in English, and I'm really happy to share the link so you could look at the corporate governance code for the public sector, which was developed here, and take it as a blueprint. More into the discussion of what we just heard at the moment, and I think that links back to many questions, starting perhaps with the chart of accounts. I think in the end, it's kind of relevant to ask, what is my ultimate goal? Where do I want to go to? Do I want to have true and fair view on the activities of whole of government? If you answer that by yes, then many questions are already answered. And that includes, Bernard, the alignment of the chart of accounts. I think the question is, to what extent or to what level of detail do you align that? We had many discussions with governments saying, okay, it might make sense to align the chart of accounts, let's say, until the 9th digit, leave discretion for 12 and 15 digits for the entities. But if you want to have like functional analysis or segment reporting, I think it's invaluable to have an aligned chart of accounts, also including the SOEs. Regarding IFRS versus IPSAS, I think my experience, and I'm talking here especially in the light of the developments I accompanied for 4 or 5 years in Saudi Arabia. First question, every single entity asked, do we really need to implement IPSAS? We use IFRS, isn't that good enough for us? And then the second question was, but of course, we have transactions and we will use IPSAS 32 for service concession arrangements. We will use IPSAS 26 and 21 for impairments, and especially if non-generating, cash-generating assets and things like that. So from a single entity perspective, this might be a really important question to answer. But again, from a consolidation perspective, if you think from whole of government accounts, in the end, it doesn't matter, because what you have a reporting package in the end to reach unified accounting for whole of government, and that has to be IPSAS anyway. So whether you have as a kind of first accounting framework, whether you have IFRS or IPSAS, from an ultimate perspective, doesn't matter that much as it looks from the beginning, if you think about this discussion. And in the end, I think, Bernard, you're right. For the comparable transactions, IFRS and IPSAS are anyway delivering the same answers. Regarding consolidation itself, I think when I listen to the explanations regarding aggregate reporting, the danger that I see is that people might misunderstand aggregate reporting as an alternative for consolidation. And it's not. I think that's really important to understand, because I think the absence of consolidation opens the opportunity to outsource risks and debts to entities which are not then kind of shown in the balance sheet of whole of government accounts in the end. And that is certainly not what we want. I can tell you from a German perspective, and Dimitri, that's going back to the famous cash-based accounting. Yes, Germany is using cash-based accounting, but what the entities are doing is they issue something which is called a report on investments in associates. What that does not provide is the responsibility which goes along with control, because it's not simply associates and kind of they don't have any control or any influence. They are responsible, they are influencing, but they are just issuing the financial statements of the single entities, even without aggregation, saying, okay, that's it, that's the big picture, and that is our understanding of transparency. That's misleading. Thank you.
Thank you. Any reaction or?
I think not a lot to answer, but a lot to agree on. So I think what I would pick out is really this kind of, like you said, Thomas, what is the purpose of the information? And if the information is not able to serve the purpose, then it's a bad system. Simply that. Yeah. Yep.
I'm going to speak in Russian, so for those who do not understand. I have a proposal rather than a question. In the public sector, IPSAS apply, and in the private sector, IFRS. And there is also IFRS for SMEs, which are different. So now, in order to have consolidation for SOEs, many issues arise, conceptual issues. For example, the definition of assets in the private and public sectors differs. In the public sector, in addition to economic benefits, useful capacity can be present, which is not the case for the private sector. Now these two frameworks have to be coordinated. I raise this issue at each workshop, and the answer I get is that adjustments should be introduced. So the question is, how should those adjustments be made? My proposal for IPSAS board and IFRS board is that some guidelines, some interpretations should be prepared as to how statements of SOEs should be adjusted so that they could be consolidated. You have pointed out correctly that aggregation is different from consolidation, and there is often confusion between these two concepts. So my practical proposal is, let's try to develop some recommendations, some guidelines, some interpretations. So in order to make these two frameworks comparable, my second proposal is, and I also have had some questions regarding these workshops, but I will leave them till the end. But I believe they're important issues which should be discussed and raised, if not at this workshop, then maybe at subsequent ones. Thank you very much.
It's a very good proposal. We need to develop some practical materials and provide some cases to these seminars. You rightly mentioned that there are different conceptual frameworks. And for me, the first problem to be resolved is consolidated reporting of the groups of SOEs. Because you may be in the situation when your main company, your holding company, applies IFRS and subsidiaries apply IFRS for SMEs or national frameworks. And then when you consolidate for the first time, you need to resolve the problems at that level, and then you need to resolve them further. And this is a difficult, complicated technical task. It doesn't mean it's not solvable. For example, you mentioned the definition of assets, and there is no contradiction here. The definition of assets, definitions of assets are similar. In this case, the definition of assets of SOEs is covered by the wide notion in the public sector. So there is no contradiction here, and we can consolidate for sure. This is my judgment. Thank you.
Ну, это мой judgment такой. Спасибо.
Maybe to add to that, I think very briefly. So first, I think there's some guidance. I also mentioned the IPSASB's staff document, and we have the good fortune of having the technical director of the IPSASB in the room. I think the document has some years of recency, and I know that the work program of the IPSASB is really filled, but maybe there is some time to look at that piece of guidance and see whether there might be some things you might add. But getting back to your point, I think it's way more important is that you are really precise in when you define the mandate of the entity, right? So if you give them commercial transactions and you give them a bulk of public service obligations, there is no surprise that this will create a mess in terms of consolidation. So I think you have two options. Either you are more precise in the mandate of the entity, or you make the public service obligation a commercial transactions in terms that, the government is paying for the service of providing that, which would mean the commercial entity will have to do some cost accounting around what does this service actually cost, what would become sort of a market value for that service, and then you have the transaction with the government, and then you're back to IFRS, basically, also in terms of the economic viability of the service.
Thank you. I see more questions coming. Yes, please.
Thank you for a very interesting and informative session. I have a practical question which is related directly to the session. There are SOEs, and big SOEs, and according to Directive 43 of the European Union, it is compulsory for them to be audited by the audit firms. This is compulsory. On the other hand, it is mandatory for them to do external audit of the accounts chamber of the SAI because they are state-owned enterprises, and the audit firms apply IPSAS, and the SAI applies the inter-SAI standards. As I understand, you already understand my question, Berkhard. I'm interested, what is the practice of audit of the SOEs? Because at the moment, we adopted the law on the SAI, the new SAI law, and SAI will not just audit the financials of the company, they will audit consolidated financials of the big companies like in oil and gas sector, in the energy sector. At the same time, the private auditors are doing the auditing. Both auditors are auditing the financial statements in terms of compliance to the accounting standards. One service is paid for, another is free service. Both services are compulsory. Tell me, please, what is the experience in the EU countries in this matter? Thank you very much. Thank you for your question, Ms. Kaponenko. I quickly mentioned in my presentation that it is very important here to avoid the application of functions. If the auditor of the private sector performs the audit of oil and gas group, the SAI of the accounts chamber should not do the same. And this is the problem of the SAI law. It's not the problem of the audit law, it's the problem of SAI law. Yes, the accounts chambers should do some audit, but they should not duplicate. For example, they can look how the government performs the function of the ownership in the SOE, how they hire auditors, what about the quality of audits, what about the audit oversight, how do we use subsidies efficiently, what is the value for money. They can do value for money audits if there are subsidies. Financial audit doesn't cover these issues. And financial audit already performed their work. You cannot do anything else, even if you apply inter-SAI standards. Anyway, financial audit is financial audit. There are no major differences, but they can do something more. They can look wider to this matter. So it is important that the legislation avoids duplication. It doesn't make sense to do two same audits in the same company. Thank you very much. We provided the same comments to the draft law. It was very important for me to hear your support. Thank you.
Thank you. Yes, I think you want to come back to the previous question, right? And there was also once, yeah.
No, I don't want to kind of squeeze in, but just to add what Andrei just said. I think the IPSAS standards have three areas. One is financial audit, the second is performance audit, and third is compliance audit. And it's actually, as you said, normally the external auditor, the private sector audit firms do the financial audit. IPSAS standards are here comparable to IPSAS standards, so they are aligned. And then the SAI is performing the performance audit and the compliance audit, looking at complementary issues to the financial audit. Just to confirm that for the European perspective.
Maybe just a very quick addition. I think you're perfectly right. And it will help for the SAI if they perform performance audits in some cases, but also to understand the financial transactions and the nature, but 100%.
just to reflect before passing to Ross, just to clarify, I think that's a very important one. We cannot limit SAI conducting audit of the SOEs. So I think this is clear. It's impossible. What we can do as a Ministry of Finance representative is to guide what type of coverage of SAI can do versus private sector auditors. SAI, if they conduct audit of SOEs, and those are mainly, as we talk about, they are prepared IFRS, they need their audit opinion for raising access to finance and for working with investors. So SAI audit will not replace private sector auditor. They will end up doing two audits, one SAI, which may not be trusted by private sector investors, and second is by the private auditor. So in order to remove this duplication, it's very important to clarify what is performance audit, yes. What is compliance audit, yes. This is the mandate of SAI and nobody can restrict them doing that. What is about IFRS financial audit, this is clearly majority of SAIs, they don't have that knowledge and experience and they cannot do IFRS audit of the entities. So this is private sector. And the solution is SAI to coordinate with the government in recruitment of the auditors, so they are happy with the quality of the auditor, and the government and SOE or audit committee of SOE are happy with that. This is the practical solution in many countries. And I understand Ross would like to react on the first one.
Yeah, thank you very much. I think what this session makes clear is a point that comes up at all of the board meetings and discussions is consolidation is very complex and very difficult in the public sector. And literally every board meeting we come across a topic that relates to consolidation and how challenging it is. But I also think what the session shows today is the complexity is related to complexity of consolidating a number of entities, aligning things. So from a standard setting perspective, we've put a significant amount of effort into aligning our standards with the IFRS where appropriate, staying up to date with IFRS developments, so that for those entities that need to apply the IPSAS in a more commercial nature, they have the ability through the accounting policies they choose to align the private sector standards. And we are fully up to date with the IFRS now. So from a standard setting perspective, standard setting process between IFRS and IPSASB is not one of the barriers. Systems may be, human resources, capacity, scope and nature, and complexity of consolidation are all real issues. They're not standard setting issues, because if you look at our standards, you want to align your policies so you can do proper consolidation, that's readily available today. That's what the staff document tells you how to do. It's not something the board can do for an entity. You'll need to look at your transactions, develop your own accounting policies, plan where you want those aligned between the private sector entity or the commercial entity and the consolidating entity so that it's easy to do the consolidation. But all those tools are there. It comes down to the complexity of consolidation that's the problem. So I think some case studies or on the ground planning on how to do a successful consolidation be helpful on an entity by entity basis, but do think there's no golden standard setting solution that's going to make this complex area simple.
Thank you. I see another question.
First of all, thank you very much for the excellent presentations. I will try to simplify the questions. Andrei mentioned during his presentation about the IFRS for SMEs requirements, particularly the statement on requirement on undue cost or effort, which states that entity should follow the standard unless it requires undue cost or effort. On the other side, we talk about the setting requirements for SOEs regarding corporate governance code, which assumes establishment of several committees like audit committee, remuneration, etc., involving non-executive directors. And it assumes definitely a huge cost for entities. What do you think? Can't it be considered as an undue cost for small state-owned entities? Thank you.
Yeah, the very short answer is that corporate governance codes are only making sense if they apply it for large economically significant entities. You always make a parallel with private sector. Corporate governance codes are required for listed entities. So you have to have an SOE which is similar in size and scope, in nature, to the listed entity. It doesn't make sense to require small entities to do corporate governance code, including setting up all the committees, boards, independent members, and so on. So that's short answer to it.
Maybe just a compliment. I mean, in some cases, you can also develop an SOE corporate governance code that can tailor some of the rules to different categories. So maybe that code can say, yeah, for the big and more commercially oriented SOEs, they can more or less comply and apply the private sector corporate governance codes, but then you may have a few rules that are more relevant for the smaller or more public enterprises.
Thank you. Dmitry, you have a question, please?
Yes, I wanted to follow up on Ross' comment a while ago. So in follow-up on the proposal we heard from our Armenian colleagues, so maybe the interpretation didn't work properly, but the proposal was, would it make sense, would it be possible for IPSAS board in particular to come up with some kind of implementation guidelines or interpretation, at least of some specifically particularly critical IPSAS-like consolidations that could facilitate the actual implementation of the standards on the ground. And I remember we discussed it at some point. So I think that proposal is very aligned with that kind of work.
So I would say actually one of the new work streams the board's just introduced in its 2024 to 21-28 strategy might help with this. So the board's added maintenance activities to its standing work program at each meeting. So when issues of application of the standards come up in practice, countries, jurisdictions, entities can send in their fact patterns, what they're struggling with, and the application panel that we're setting up will be able to look at those and decide whether there is more non-authoritative guidance that could be added to the standards to help with this. In terms of actual interpretations, IPSASB doesn't have an interpretation group like the IFRS Foundation where they have the IFRIC. So the board itself would never interpret its own standards. So for our board, it would be whether there's an issue where something that can be added to the standards because they're not working in practice, we'd adjust the standards, but we don't have an interpretation function. We're much smaller than the IFRS Foundation, and from a resource perspective, we've never had the ability to separately interpret our standards, our structure.
You want to reflect on the same, because Tritan has a question. If you reflect on the same, please go ahead, and then we come back to Tritan.
I just wanted to make a suggestion with regard to Mr. Petrosyan's question and all the comments and all the responses that were actually provided here. Maybe in this work group, we can make an exercise. For example, with regards to Austrian SOEs, we can take top 10 or top 20, analyze all the financial statements that are prepared the framework of IFRSs, and analyze, group all the transactions that are subject to IPSAS, let's say, revision. If we would have done it for the consolidation purposes in the framework of IPSAS, we can have these types of transactions that should be that are subject to, let's say, revision. And maybe we can come up to a group of transactions that we all will know, that we all can discuss, and afterwards it could be useful for us in our countries to go to this framework and have thought on it.
Hello, thank you. I think it's going on what everybody's saying, and I just have a short question. And I mean, the presentations were very comprehensive, and thank you a lot for that. As we understand, all it is very complex topic to deal with SOEs. In terms of, I mean, we heard there's double auditing, double accounting framework, double legislative scope, public sector scope, private sector scope. In terms of reforming and in terms of improving the information that we need from SOEs, what would you suggest how we can prioritize the intervention in this area in order for, at least in our countries, to improve all these issues and improve the information that we can get from the SOEs, either in the public sector or either in the public interest? Thank you.
Oh, it's a complex question, but in terms of prioritization, I mentioned some of it in my slides, and I think, well, first is to take the stock, what kind of SOEs you have. Second is to review what is the ownership function. Do you really have an ownership function which is demanding from SOEs? Then you review how you appoint the boards and how you have committees that require, you know, things around financial reporting and all these things around. Of course, you need to have proper accounting standards for entities, but in Albania, for instance, you already have it in the law, so it's not a question. It's a question of implementation and why things don't work. Things don't work because you either don't have a demand side or you don't have a supply side. So in Albania, I think you have both issues, you know, supply side because you have weak SOEs in terms of financial capacity to produce good financial statements. On demand side, you know, we mentioned that in 1 year we met 3 deputy ministers in charge of the same things. So you can imagine, an institutional arrangements, institutional setup for ownership function is pretty much missing, and that's why the demand side is not properly working, and this is why you need to. So it's a complex thing, but slowly, step by step, and of course, once you have the function institutionalized, then you have the proper strategy for companies, KPIs, and all these numbers have to be based on sound financial statements. Otherwise, it's difficult to monitor and it's difficult to demand the management to act properly. So these are the things which are elements. Thank you.
100% agree with you, Andrea. I think maybe the only perspective to add is exactly what you said. I think if you start using the information, then you will see the shortcomings of the information, and that's where you can start improving again, right? But if you do not have any use of the information in the first place, then, you know, it's this kind of cost-benefit relation to any information, right? If you put something out, it's not getting used, it's actually not worth the exercise. So maybe finding also ways on how to better integrate this first set of information you have, for example, on the comprehensiveness into the PFM system, right? So how is this aligned with the government goals and responsibilities and so on? And if that's kind of catching traction, then you can go the next step. And ultimately, we can talk technical issues on accounting of transactions, but I think that's very low in terms of level.
Thank you, colleagues. My suggestion is to have a short break, some 15 minutes, and we will continue the SOE topic, so you can keep the questions coming for the second session. So let's come back at in 15 minutes.
So good late morning. Good after coffee morning. So we will move now to the next item of our agenda, and it's to expand on the previous session. And we will be talking about experience of Austria and Korea in terms of financial reporting of state-owned enterprises. The Austrian experience will be more on the demand side of financial information produced by companies. And some of the information was already covered by the previous session. And the Korean experience will be also about financial reporting requirements of SOEs and public availability. So the Korean speaker will be online. So we will start with Akriti, who joined us from Österreichische Beteiligungs AG, which is shortly OBAG, which is a holding company, which has an ownership function for a large SOE portfolio in Austria. So Akriti, the floor is yours. The presentation, can I ask the presentation?
Thank you very much, Andre, for the kind words of introduction, and thank you very much for the invitation to present ÖBAG's governance structure and also reporting requirements to you. I'm privileged to be part of this program today, and I particularly appreciate the fact that I am here able to bring in a few of the points more on the governance side of things, and which are meant to be complementary to the previous panel that you had, where I understood a lot of the accounting aspects have been covered already. To give you an idea of what ÖBAG is, that's a structure which perhaps is familiar to some countries, but not to all. Particularly, I'm seeing our colleagues from Azerbaijan here. I know that you are working on a holding entity as well, and ÖBAG is exactly such a holding entity for state-owned enterprises. And the holding structure as a centralized ownership form for SOEs is I mean, I would say I wouldn't want to call it a best practice, because I know there are multiple practices that have their beneficial aspects, but I think it does combine a lot of very good aspects of a centralized ownership and portfolio management, because we as an organization cover quite a few companies under one roof, and this enables us to have a portfolio view on a lot of the topics, including accounting and reporting, which would be perhaps different if we had a decentralized structure. So looking into our overall governance, let me please explain briefly where we are positioned. AG stands for Aktiengesellschaft in German, and that translates into stock corporation, which means that we, as a legal form, enjoy a high degree of independence. That's a privilege, of course, but it also requires sufficient level of transparency and accountability. Particularly given the fact that we, as a company, of course, also qualify as an SOE, and of course also are subject to similar transparency standards and parliamentary information obligations. As I mentioned, as a stock corporation company, we have an independent CEO. We have a supervisory board that consists of 6 shareholder representatives that are independent. So we don't have civil servants in our board, which I think is an important point to make, and 3 employee representatives that are nominated on a mechanism that is defined in the law, but basically represent the 3 largest stock-listed companies in our portfolio. We report to the Ministry of Finance as our direct shareholder representative. The Ministry of Finance basically exercises the ownership rights in ÖBAG on behalf of the Republic of Austria. And there are certain instances that are particularly strategic or grave in nature, where we would also have either a reporting requirement or an approval requirement from the federal government. And of course, right on top, the Parliament is both our foundation, but also our ultimate account holder. To give you a brief idea of how this ownership entity evolved, I think this is relevant to understand also how the bigger picture of what the role of an ownership entity can be. And I would just like to take you back to the 60s, where the predecessor form of ÖBAG was initiated. So this post Second World War sentiment resulted in the political idea of unifying the industrialized portfolio companies under one roof, and that was initiated back in the 60s. And after a wave of privatization, which was relevant in many countries, but also in Austria, we then received the legal form that we currently have, or the legal identity that we currently have. There were 2 waves of privatization, one back in the 90s, then in the early 2000s. And there was an in-between phase where The independent Austrian stock corporation was converted into a limited liability company with the thought of creating more stringent reporting and accountability requirements. But very soon, the realization came that the benefits of the independence were higher than potentially the benefits of that closer reporting to the ministry in a limited liability form. So it was in 2019 that the company was again reconverted back into a stock corporation that it today is. What does our work encompass, and what does also, in flip side, our reporting encompass? We are by law required to do a portfolio management that is active in nature. What does that mean? That is meant to describe a portfolio management that goes beyond the mere management of our assets, that it goes beyond the mere portfolio or value preservation. It's in the law actually speaks of value creation, and this value creation, of course, requires multiple tools. And given the public angle that we cover, we of course have to also account for those tools or make them transparent. The portfolio companies that are covered by ÖBAG are 10 in total, and 5 of them are listed. So when it comes to the reporting requirements of our portfolio companies, we of course are also in close touch with our portfolio companies when it comes to the new reporting requirements that apply to listed companies. Those are, as you have already heard in the previous panel, particularly particularly complex and rich, but at the same time, also we as the holding company use our holding position to try to help our portfolio companies develop an exchange of best practices and a better understanding of what also the new EU regulations require of them that are going to be enforced next year. 5 are listed, 5 are non-listed, and the impact of ÖBAG as a whole, with its portfolio, is quite significant, representing 28% of the Austrian trading index, securing over 100,000 jobs, and also paying dividend to the Republic of Austria in a yard scale of 1 billion, and last year actually due to surplus dividends even significantly beyond that. 16 billion gross value creation, and of course a significant impact in taxes, of course, increased the level of accountability that is expected of the company and its portfolio entities. And briefly, just to give you an idea of how we do this active portfolio management, I would just want to briefly mention our patient capital approach, looking at the long-term perspective of asset management and portfolio development, which is something that distinguishes us perhaps also from other shareholders that have a different approach and may look more towards the short-term results. This long-term view is also something that is actually stipulated in the law, that our focus needs to be a long-term value creation. And this gives us also the mandate to go beyond financial quarterly returns, but also look into where the company is developing, both from a financial perspective, but also from a strategic and ownership perspective. We have created a strong focus on ESG standards that apply to our portfolio companies, and where we also expect a high degree of proficiency. I will, in the next chapter, also briefly explain how we use our ownership function to help our portfolio companies achieve that merit. And in our mandate also, we have the requirement to address Austria as a business hub, as a business location, and to secure the interests of Austria as a business place as well. That kind of gives us a triangulated view towards our portfolio companies, and also helps maximize here the overall impact that we achieve. And in terms of the tools, very briefly, I've already mentioned most of them, the independence of the company and also of our portfolio management, the governance focus that we exercise in our supervisory board work, which is probably the most critical instrument of our asset management, but also the focus on value enhancement and sustainability have been our pillars on which we have built our work. And briefly touching upon also our support as a holding company, again, I'm going to be describing more the ownership function that we entail here, with vis-a-vis our portfolio companies. Looks towards, on the one hand, a tool that we have introduced since about 4 years and has been particularly useful for us. That is an ESG monitoring tool where we track our portfolio companies based on their performance in various ESG KPIs, and we mirror their performance with their relevant peers. So this is actually an exercise that we conduct every year. And we do this in close cooperation with our investment managers and our controlling department that work together here to identify which is the target group of a company. And the interesting part is the target group can change also over time, because the peers also apply and develop new strategies in how they position themselves. And the transformation of the companies can also result in a situation where we need to look at peers from multiple perspectives. Now, to make it a little bit more tangible, taking the example of OMV, which is Austria's quite well-known oil and gas company. OMV has, since quite a while already, announced its transition and transformation more towards petrochemicals. And that results also from our monitoring that we would triangulate OMV not only vis-a-vis its peers in the oil and gas sector, but also with the relevant chemical players that we would consider peer group to OMV. And in this context, we work a lot with the data providers that have established a strong set of data in the ESG sector. We also, of course, go back to the original source in terms of reviewing the ESG reports of those companies and also of our companies to, on the one hand, gain in-house expertise. I think that's one of the very important benefits of this exercise, but also to make sure that we are not only dependent on external data providers. And in this context, we get a very interesting perspective on our portfolio companies and understand better where do they stand in their peer group, but also where do they stand within our portfolio, and where do we as a portfolio, what are the focal points that we as a portfolio need to look at to perhaps increase or improve our ESG footprint as a whole. That does not only limit, is not only limited to carbon emissions, but also with regard to the other dimensions of sustainability. But of course, as topics that we cover, to give you a brief overview, carbon emissions is, of course, one central one. Energy consumption is another. Also waste and recycling, but also when it comes to the S, the social area, employee experience, diversity, equal pay. And in the governance sector, as examples, what we look at is board composition, taxonomy, and also board tenure, for instance. So this overview tool, as you may call it, or monitoring tool, as you may call it, is something that we have been using since the last couple of years and has really been extremely helpful to objectivize certain feedback points that we would have vis-a-vis our portfolio companies, but also to get a transparent view for us internally, and to make sure that our work is not only relevant to us as the holding, but also is properly fed into the portfolio companies. We have developed a very neat approach how we would translate that to the portfolio companies. On the one hand, the annual survey of the ESG data, as I mentioned before, is conducted over the summer, typically, as a start of the second year half. We use then the supervisory board meetings in Q3 and Q4, where we would then dive a little bit more in detail with the representatives or to the boards that are part of the ÖBAG team, but also the chairs of the boards, and we would present that information to them as well. And based on that, we would derive implementation areas and implementation actionable points, particularly with regard to the remuneration and incentivization plans, the ESG component, and the result of the monitoring tool often is a helpful input in this context. Also briefly touching upon how this translates into our reporting requirements vis-a-vis the ministry and the parliament and government. I would briefly want to cover those points as well. On the one hand, of course, I would not I should be mentioning the general information and inquiry rights the annual general meeting has, but also our law has particular reporting requirements that apply to us as the state holding and are slightly different from the general Austrian Stock Corporation Act. On the one hand, we have a statutory information right to the Minister of Finance with regard to those matters that apply to ÖBAG, all significant and matters and decisions. This information right can be exercised by the Minister of Finance at any time. And that also includes that information needs to be made available accordingly. We, in addition, also have our own quarterly reports that which would cover all material issues relating to ÖBAG and our investment management that we would also again submit to the Ministry of Finance. And we also report once a year to the federal government on all those significant matters and decisions. And this report, the last one I mentioned, is also then made available to the Parliament. In detail, looking at the content of what these quarterly and annual reports cover, this of course covers the significant events of the reporting period, but also the business development of ÖBAG as the holding company, the risk control report, the overview of the participation that also again includes the financials of those participations based on the public information available, and details of those milestones in those relevant companies. In addition, an additional report is also provided in Excel format based on the budgetary laws, also on a quarterly basis. And two of them, the Q1 and the Q3 report, are also made available to Parliament in this context. And when we look at the annual report that we also submit, we basically abstract the main points of the quarterly reports into this annual report, which covers the significant events, the business development, the overview of the shareholdings, but also the forecast for the coming year and the governing bodies that apply. This, in a nutshell, is our governance and legal reporting overview. I think where we are now positioned is that we will definitely have a debate on how the reporting in the ESG topics should translate also to our overview and our reporting requirements as the state holding. This is something which is not fully reflected yet, but it's definitely a topic that would come up in the future. And yes, I think that brings me to the end of my presentation, and I look forward to questions and the discussion. Thank you very much.
Thank you very much, Akriti. So let's hear for the second presentation, and then we can take a round of questions. So the second one will be presented by Sung-Jin Park, who is Executive Director of Government of Accounting and Finance Statistics from Korean Institute of Public Finance. So he's joining us remotely. Can you hear us?
Yes, I can hear you. Can you hear me? Hello? Can you hear me?
I think you're muted now.
Oh, I am?
Just a second.
No, I'm not. Can you hear me
So
now?
now we can hear you. Please go ahead.
Okay, good. So I'm taking over the presentation, right?
Yes.
Looks like it. Okay, so thank you for having me here today again. Well, yesterday there was a technical glitch prevented my more in-depth participation of this presentation and discussion. But before I start my presentation, I think I need to update or correct my affiliation information. I used to serve as executive director of Korea Government Accounting and Finance Statistics Center of KIPF, but recently, very recently, I changed my. Can you go back to the first slide? Recently, I changed my affiliation, so I'm working at Yonsei University in Korea. So, anyways, that as just additional information, and I actually enjoyed a previous presentation about UBAC's holding entity structure with centralized ownership for SOEs. I think the case of Korea would be maybe quite different. Can be 180 of the case of UBAC because Korean government, Minister of Economy and Finance, actually deal with this institution, one institution at a time. So let me elaborate more about this aspect. But I know I'm putting the title as financial reporting of SOE, a state-owned enterprise here. But to be more precise, I have to use the term SOEs and quasi-government organization, QGOs, and other public institutions. So three different groups, because all those three groups of public sector entities share similar financial reporting framework in Korea. So let me talk a little bit more about that. Okay, so we are on slide 2. So this is a visual summary of current structure of public sector entities in Korea. Let's find three major blocks in this figure. So on the left, on orange box, that represents central government, all those entities, ministries, and other related organizations in the boundary of central government. And the middle, local government as a second block. The third one from right and the bottom, that area, that block actually covers SOEs and quasi-government organization, QGOs in Korea, and other public institutions as the third last building blocks of this figure. While the central and local governments are using the government accounting standards, or national accounting standard or local government accounting standard, still a government accounting standard, but SOEs and QGOs, quasi-governmental organization, QGOs are required to use IFRS as the main language for their financial reporting. When it comes to the fiscal reporting based on GFSM, those QGOs are included in the boundary of general government, different from SOEs. SOEs are excluded from the boundary. But regarding their financial reporting, they still follow the same practice with SOEs and use IFRS. Please go to the next slide. Okay, so there's animation. Yeah. Slide number 3, please. Okay. All right. So then, what are the nature of SOEs and QGO? I'm using these terms quite often. I'll explain in more detail later. But anyway, so nature of these SOEs and QGOs in their ownership and control structure. Obviously, these public institutions are in between pure government entities on far left and pure private sector entities in far right, because they are founded through the government funding, although some entities already went public by listing their shares in a stock exchange. But interestingly, however, control over SOEs and those QGOs are under the purview of either Minister of Economy and Finance in Korea and a certain aligned ministry actually related to the business of the specific institution. We call those ministry as competent ministry competent ministry have the right to control the specific public institution and have authority to make rules and regulate those business of those public institutions. For example, based on the figure here, the Ministry of Economy and Finance commands economic control of COMSCO, so KOMSCO. Try to find that acronym within the red box that represent Korea Minting and Security Printing Corporation. Well, that is one member of SOE group classified as quasi market type. And Ministry of Trade, Industry, and Energy control Korea Gas Corporation. That is a market type and publicly listed state-owned enterprise in Korea. Well, in case of the commission service type QGOs, or one example, KOTRA, Korea Trade and Investment Promotion Agency, is under the purview of Ministry of Trade and Industry and Energy. Well, these are just examples of the relationship between a specific public institution and its competent ministry. And another example in the figure, the National Pension Service, that is what I call as fund management type QGOs, and it is controlled by Minister of Health and Welfare. Please go to slide 4. So the definitions and classifications. So as a matter of fact, not all public institutions are classified as either SOE or QGOs. To be classified in either one of these groups, there's a requirement. So asset size should be greater than 3 billion Korean won. Well, that is close to about 2 million in euro. And the number of employees, full-time employees, should be greater than 300. And annual revenue should be greater than 20 billion Korean won. That is equivalent to about 13.5 million in euro. And if any of those 3 conditions are not met, that public institution will be classified as not SOE, not QGO, but other public institutions. And only competent ministry will exercise control over that other public institution. So not through the Ministry of Economy and Finance. Ministry of Economy and Finance will not care about those small other public institutions. And here, the proportion of the revenue coming from government, that is the factor to differentiate SOEs and QGOs. When self-generating revenues are greater than 50%, then it is a public corporation or SOE. Well, public corporation is Korean term of calling SOEs. And if self-generating revenue is less than 50%, more in other words, relying more on government for revenue generation, then it is classified as QGOs. So large enough, but revenue mainly comes from government, then it's QGO. Large enough, and revenues mainly coming from outside of the government, but through the market competition, that's SOEs. Can you go to the next slide, please? All right, so putting all these public institutions into one map based on the degree of management control, have more direct and stronger control from the government, or allowing more autonomous management. So based on that dimension and based on public versus private nature of the business, you can see that the market type SOE, I just typed in top right corner of this figure. Market type SOE, well, that is SOE having a revenue 85% or more coming from non-governmental businesses. So it is very close to a private sector entities. So that's why it is located right next to the private sector company in the figure. So you can just check the location of a specific entity type, and you can check the degree of publicness and degree of control versus autonomy. Please go to the next slide. Page should be 6. Right. I know the font size is a little bit small here, but I'm just throwing in just 2 example entities to talk about ownership structure of SOEs and QGOs. So first one, the Port of Incheon Port Authority. That is other public institution. So under the purview of Ministry of Ocean and Fishery. The second example is Korean Electric Power Corporation. So KEPCO, that is a largest power supplier in Korea, and it is publicly this company. Its shares are traded in Korean Stock Exchange. And 100% share of the Incheon Port Authority is, you can see the table on the right-hand side. That shows the ownership structure of those 2 entities. Incheon Port Authority, 100% shares are owned either directly or indirectly by various line ministries or other public institutions. You can see the name of those shareholders: Ministry of Economy and Finance, Ministry of Ocean and Fisheries, Korea Ocean Business Corporation, that's other public institution. Korea Development Bank is also other public institution, and Export-Import Bank of Korea also other, that's QGO. And the second entity, the Korea Electric Power, the KEPCO, well, KEPCO is actually recently selected as the preferred bidder for Czech Republic's nuclear plant deal. Anyway, so KEPCO, for the case of KEPCO, about 51%. You can actually add up those ownership percentage. Korean government, Korea Development Bank, and National Pension Service. It should be added up close to 51% of the share. The remaining 49% is actually owned by either domestic investors or foreign investors. So it is privatized. Its shares are traded in stock exchange, but still, majority shares are owned by either directly or indirectly owned by the Korean government. So these are the example of those public sector entities actually either 100% owned by government or actually controlled by government through the majority ownership. And as I told you at the beginning, because all of these public sector public institutions use IFRS as their financial reporting language, I cannot see my presentation. Can you put it back?
It's on the screen. It's slide 6 at the moment. Should we move it?
Yes, you can move to next slide, but I cannot see. Okay, it's coming back. Well, can you go back to the slide 6? So in terms of accounting standard, yeah, there's no difference because all those institutions are supposed to use IFRS. But in terms of financial reporting, it can be a little different issue because based on the classification of these public institutions, either as SOE or QGO or other public institution, the way Korean government exercise management control is actually different. So because of the because of that difference in management control of the Korean government, it provides different incentive to those public institutions. So it actually drive variations in terms of financial reporting. One important aspect of that management control, I'll talk a little bit more about performance evaluation later on, but based on the annual performance evaluation of these public institutions, if certain public institutions receive a degree of a grade of A, they'll receive large amount of bonus. B, C, fine, but if a certain institution receive the performance evaluation of D degree, D grade, multiple years in a row, then the CEO or president of that public institutions will be fired, and there will be no annual bonus for those poorly performed institutions based on the annual performance evaluation. And for that annual performance evaluation, financial information coming from this financial statement is part of the key information base for the evaluation. That's why this financial reporting or accounting will give a strong incentive for those public institutions when they try to translate their performance into accounting numbers. But so accounting practice on one side and accounting standard on one side, but another issue we can think of, another question we can think based on this ownership structure is, as we can see, well, although there are only examples on the slide, but most of those public institutions are owned, at least controlled by Korean government. Even in the case of KEPCO, 51% is owned by Korean government. So in other words, those institutions are controlled by Korean government. Then do we actually consolidate those state-owned enterprises and QGOs in Korean government financial statement? In other words, do we prepare consolidated financial statement, including those public institutions, SOEs and QGOs? Well, the answer is no, we don't. But I'll tell a little more about that in the coming slide. For now, let's move on to slide number 7, page number 7. All right, so more back to the accounting practice of SOEs and QGOs in Korea. I put another abbreviation, AMPI. AMPI simply represents, you can actually check from the main body of the text, Act on Management of Public Institutions. That is actual statute providing legal framework for management control of all SOEs and QGOs in Korea. And as you can read from the slide, in section 4 of Article 39 of that AMPI, it is stated that the accounting of a public corporation, well, that is SOE, and a quasi-government institution, that's QGO, shall be based on accruals. And outside of this AMPI, but related regulation, actually rule for accounting affairs or public corporation and quasi-government institution. Well, anyway, a certain rule related to those public institutions' accounting practice actually designates IFRS as accounting standard for their financial reporting. That's why all public institutions are using IFRS for their financial reporting. But the AMPI also says, I was underlined for that part, to clearly show business performance and increase, decrease, and change in an asset. Those public corporations and QGOs should use accrual accounting. In other words, it's maybe implicitly reveals the intention of Korean government enforcing the use of accrual accounting to those public institutions. Provide relevant information, not for decision making, but for managerial performance evaluation. So that is the main reason behind of forcing most of public institutions using accrual accounting at the beginning. Going to page 8, next, please. All right. Anyway, so right. Even though IFRS is adopted for all those public sector public institutions, SOEs, one major departure from the conventional IFRS is related to this accounting separation. It is actually consistent with the best practice recommended by OECD. And OECD guidelines on corporate governance of state-owned enterprise actually says, well, I'm going to read, so where SOEs carry out public service obligations, it is particularly important to fully disclose all public service obligations and their reasoning and scope and related compensation or advantage. and a structural or accounting separation of those activities should facilitate the processing of identification, costs, and funding of those obligations accurate and transparent. Anyway, so even OECD recommendation actually asked for accounting separation. Can you go to the next slide? That is actually adopted by Korean government. So following that OECD recommendation, accounting separation is actually mandated to all public institutions, including SOEs and QGOs. So their financial statement should separate assets and liabilities, profits and expenses coming from a specific government-funded project. So when multiple projects are signed and a certain public institution carries out multiple projects, then assets should be divided into multiple pieces based on the fund designated for a specific government project. So that's the way accounting separation is actually applied in Korean SOEs and QGOs. And when a certain public institution has its subsidiary, for example, then consolidated financial statement shall be prepared reflecting that accounting separation also. And because this is a practice that can be sometimes confuse some accountants, so Ministry of Economy and Finance, well, not recently anymore, but in 2016, issued a guideline as part of its budget compilation guideline. So after asking public institutions come up with their own accounting separation plan, the Ministry of Economy and Finance actually asked them to consult with the ministry to ensure the consistency of applying that accounting separation across all public institutions. And also, Ministry of Economy and Finance actually asked that institutions to build this accounting separation into their regular operating procedure, not as annual event, but be part of their organization structure by appointing an accounting separation officer who will be responsible for the quality of those accounting information after applying this accounting separation practice. Next slide, please. So, by the way, so according to that AMPI, all SOEs and QGOs are required to submit their annual budget to the competent ministry and Ministry of Economy and Finance, along with a Board of Audit and Inspection. The Board of Audit and Inspection is a Korean supreme audit institution. Anyways, both of the budgets and after fiscal year end settlement information, both of those information will be used for performance evaluation of that public institution. So going back to going back, we'll go to the next slide, please. So settle. Okay, so to complete the settlement of the account, because the budget was given out, so it should be settled. Public institutions are required to get external audit on their financial statement. So they have to hire public accounting firms and get their audit opinion. And once that complete set of settlement document are prepared, that settlement document should be submitted to Ministry of Economy and Finance first, and then it goes through another review of the Board of Audit and Inspection before finally submitted to a National Assembly in August. So that's a process of generating and using this accounting information for budget allocation and for settlement as well. Go to the next slide, please. All right. So although these SOEs and QGOs accounting practices are originally and mainly driven by the purpose of management control and performance evaluation, the financial reporting and disclosure aspect of these public institutions has not been treated lightly by the Korean government. They haven't considered this financial reporting as also one important task for managing public institutions. Actually, Korean government invested a significant amount of resource and effort to establish a comprehensive disclosure system covering all public institutions in Korea. And the system is called as ALIO, A-L-I-O, ALIO, representing all public information in one. It's like a kind of citizen-oriented web portal of SOE, QGO, and other public institutions information, financial information and non-financial information. So if you are interested in this ALIO system, actually you can check one of the World Bank publication, public disclosure on state-owned enterprise. You can see the image on the right side of the slide. I'm saying that because unfortunately, as far as I know, the ALIO system does not provide English version of it, so you may not be able to process it, even though you visit the website. Anyway, so going to the next slide, please. And disclosure made through this ALIO system is not only about financial information, but much more comprehensive. The disclosure template actually that is provided by ALIO system to individual public institutions, or SOEs and QGOs, and other institutions as well. And that template has 4 sections. Section number 1, general operation. Number 2, financial information section. And section number 3, internal or external evaluation and public opinions about the performance of that institution. And the last section is about disclosure of contract made by institution or research project offered to outsider for compensation, things like that. Those information will be actually the last section related to the independence of those public institutions. And among these 4 sections, the general operation, including 21 items, provide most of non-financial information, including the governance of institution and management style, or honoring human rights or other social values. So ESG information mainly fall into this first section of the disclosure. And the second section, the financial information, is another major section, providing all of those financial information. So general proposed financial statement is actually part of this section, and other financial reports are also included here. Please go to the next slide. '14, please.
Yeah, it's 14 at the moment. Yes.
Okay. Yeah. Okay. So these are just images, because you cannot actually go read Koreans when you visit the ALIO system. I was trying to borrow a couple of images from that World Bank publication. So if you go to the ALIO system, probably these are the interface you will see, and so you can choose a specific type of SOEs or QGO for your own kind of information search. So this is like a search engine for public institutions or SOEs, financial and non-financial information. Or the second image on right bottom part of this slide, you can actually go into the browser, including all information for one specific institution at a time. So in the second image, one row represents a specific institution. So you can click through to get much more detailed information of individual public institution. So, oh, that's fine. Slide 15. So why this performance evaluation is a big deal from the public institution point of view, and what is the role, what is the importance of accounting information related to this annual performance evaluation of SOEs and QGOs. Well, I'm listing 5 main purposes actually stipulated in most of annual performance evaluation guidebooks. But from our standpoint, what is critical is I just not highlight, I boxed in red. So out of 100 points for the performance score for each year for each institution, management of financial performance takes over 20 points. It looks like only 20 points out of 100, but other elements, including business strategy, leadership, and implementation of social value, management of organization, human resource, most of other elements or factors for this performance evaluation somehow reflect this financial performance actually written in accounting terms. So that's why individual public institutions have strong incentive to prepare their financial statements in the right way to showcase their performance better than words. Go to the next slide. And this is kind of how, okay, next slide, please. I think this is the big contrast from the previous presentation about the centralized ownership structure of UBAC holding an entity, right? Because in case Korea, Minister of Finance is actually the center of this figure, dealing with individual public institution at a time. But because public servant in Ministry of Economy and Finance have on limited time for this annual evaluation, down a bottom right corner, every year Ministry of Economy and Finance actually commission KIPF, and KIPF actually recruit a team of outside evaluator for these public institutions' annual performance review. So during the review, because this evaluation team is recruited every year,
That I'm not sure if it's one.
they have to be trained for the evaluation. And one coherent aspect of this annual evaluation is actually I put the red color in the arrow. The red color represents information coming out of the financial report. Those accounting numbers actually used by KIPF evaluator, not by outside evaluators. So KIPF evaluators actually consistently apply this performance evaluation criteria based on financial information year over year. That's why the consistency is actually made through year over year, you linking those financial information to SOE and QGO's performance evaluation. Again, these are another example of importance of using this accounting information, mainly for managerial performance evaluation. Going to the next slide, please. And then the first question I threw in at the beginning, how about consolidation of those controlled public institutions, controlled SOEs and QGOs by Korean government? Do we prepare consolidated financial statement at Korean government level? I just put that question in right side of this figure, state-owned enterprise consolidated. I told you the answer is no. Please go to the next slide. And one simple answer I expanded so far is Korean government are not preparing consolidated financial statement because from the beginning, the reason behind of making public institutions use accrual accounting is for performance evaluation, not for preparing consolidated financial statement. However, as you can see from the graph on the slide, information related to the public institution's financial performance or financial condition should be somehow reflected into the way Korean government manage its own public finance. Because as of now, the three lines at the bottom, red, green, and dark green, those are information based on cash-based financial debt statistics. And the next one is number from GFS, which Ministry of Economy and Finance actually use for its own fiscal policy management. And the third one, the red one, is actually liability figure based on PSDS. those are the information actually prepared by Korean government and for all the public sector entities in Korea. But as you can see from the dotted line at the top, when all public sector entities information, financial statement information is actually put together, that figure is manually prepared for this presentation. There's large gap between the number Minister of Finance actually used for each on fiscal management decisions. Point is, as of now, consolidated financial statement is not prepared, which leaves a hole in the way Korean government use all the resource in the public sector, not only for government, but for the public sector in general. Let's go to the next slide. And this is one way I was trying to show true ownership structure. So I'm using the Korea Electric Power Corporation case. This information coming from last year's financial statement. So based on year-end financial statement, KEPCO says about 18.20% of its outstanding shares are owned by Korean government and 32.9% owned by Korea Development Bank and 6.61% National Pension Service. But when we actually go to Korea Development Bank's financial statement, we can see that Korean Development Bank's outstanding shares, 91% owned by Ministry of Economy and Finance, and 5.76% Ministry of Land Infrastructure, 1.84 Ministry of Trade, Ministry of Ocean, and Climate Response Fund is actually managed by Ministry of Economy and Finance. So 100% of outstanding share of Korea Development Bank is actually owned by Ministry of Economy and Finance or other line ministries. Means Korean Electric Power Corporation, as we can see from this ownership structure, clearly controlled by Korean government. But as you can see from the statement on right-hand side, current government accounting standard have no rule for public sector-wide consolidation of financial statement. And recognition of all those assets is only based on acquisition costs as of now. So a certain public institutions established, let's say 30 years ago, for example, each historical cost or initial budget allocation to establish that specific public institution still sitting in the Korean government balance sheet, so which has not been actually translated to fair value. So that leaves a hole in terms of information for fiscal management. Please go to the next slide. But Korean government is also trying to do something to deal with this kind of issue coming from the lack of consolidation. So trying to provide a certain technological solution coming out of for the trouble coming out of the lack of consolidation. So this is most recent update from KIPF. So as of now, Ministry of Economy and Finance is trying to install another information system. It's called as PIFRS, Public Institutions Financial Reporting System. So through that PIFRS system, Ministry of Economy and Finance trying to collect individual public institutions' financial informations electronically and process those individual institutions' financial information at a centralized location. So even though, and make it searchable through the cross-referencing. So through this electronic or technological solution, trying to provide information coming from related or simulating somewhat consolidated financial statements. Can you go to the next slide, please? So actually this, that was the last slide. Actually, this system development is not finalized yet. So we are actually waiting to see how much of information can be provided through this cross-referencing of information coming from different public institutions. But yeah, let's wait and see whether this technological solution can be a cure or remedy for the lack of consolidated financial financial information in the way Korean government use public sector resources. And that's all I got for now. And thanks for paying attention to my presentation. I'm going to turn the microphone back to who? I'm sorry. Anyway, I'm going to wrap up my presentation.
Thank you.
All right.
So, colleagues, we are a little bit running out of time, but let's take some comments and questions. You see that the experiences of Korea and Austria are quite different, I would say, in many aspects, but it doesn't mean that we should not look at them and study them. I guess we could draw a lot of positive things, and evolution is also important to mention. You see that Austria started to reform this sector back in '60s, which is a long way, right? So, colleagues, any questions or comments? Okay, maybe before you think, I will ask a short question for Austrian experience about. So you mentioned that you have around 10 companies in your portfolio, right? But there are some other companies that are not in portfolio. And the reason I'm asking this question is because whenever we recommend the government to work on consolidated or on a centralized ownership function, we always tell them you should really take everything together, except maybe with some exceptions. Sometimes, you know, the defense can be separated for whatever reason, security, some companies, but overall, because the tendency is often that that governments want to create a holding company and only take the good companies, and the bad companies, let them be there. You know, so that's my question. How is it structured here?
Yes, absolutely, very valid point, and of course the answer is more a political one, which is not one which we at ÖBAG could decide or influence. But just to give you a bit of a background of how this portfolio came about, as I mentioned, ÖBAG, the beginnings of ÖBAG go back to the '60s, and the initial idea was to bundle those portfolio companies or state-owned enterprises and participations that have an industry focus. And from that perspective, that industry focus also translated into a capital markets focus into many instances. And this should not mean these are the good companies versus those are the bad companies. I think that really isn't the split. But the fact that industry and capital markets require a different form of ownership and investor communication, investor positioning compared to shared services company, for instance, or other SOEs that are very healthy and good and also provide a lot of public services, but however don't have the capital markets as another stakeholder to keep in mind. That is the rationale behind the split in this case.
Thank you. Thank you. Yes, please. We'll probably need to.
My question is regarding consolidation. I would like to say that in Georgia, state-owned enterprises are serviced by the Treasury, and this work should be completed within 2 years. There are more than 300 SOEs, which should shift to Treasury servicing. But at this point, we do not touch upon their reporting or accounting. They apply IFRS, but once the reforms are completed, they are expected to use consolidated accounting. But where a ministry is a founder, should state-owned enterprises report to that ministry, and then the ministry will consolidate and report to the Ministry of Finance, so that consolidated reports are prepared for the government? Or do state-owned enterprises prepare consolidated statements for the Ministry of Finance, so that consolidated reporting is then submitted to the government? My next question, do state-owned enterprises consolidate separately on the basis of their financial reporting? Which option is better if our colleagues have any related practices? It would be interesting to see what their experience has been.
So let's hear first.
Sure. So in particular, the case of Austria, and I'm just focusing on ÖBAG in this context. We actually have a special provision in the law that actually prohibits us from consolidating. This we were just discussing it by coincidence. This actually it was introduced to the law back in the 80s and had a background of more antitrust related perspective, where the thought process was that requiring or providing for a consolidation could have the effect that in terms of antitrust filings in one of the portfolio companies, in flip side, also the turnovers of the other portfolio companies would be relevant. But we were also discussing right now that this, of course, is a singular case and also perhaps not reflective of the effects, financial effects that a consolidation would bring, and which, of course, are foregone in this specific context. But this is the situation for ÖBAG in particular and our portfolio companies.
Thank you. So if I can put it in other words, so this is not necessarily the best example to look at, right? So because the holding company needs to consolidate, otherwise the financial statements are simply not credible. And I'm just wondering how the auditors of ÖBAG are signing off financial statements if you don't have consolidation. That's another question. But anyway.
I think the fact that it's statutorily provided for is...
Yeah, it's because on the law, based on the law. Okay, so Mr. Park, would you like to comment on this question, please? You're muted.
Anyways, I could not translate the question, so can you repeat the question in English, please? What was the question? I couldn't see. The only thing I heard is the language I couldn't understand.
Well, the question is about consolidation. So how, for instance, in Korea, is it consolidated based on ownership through the relevant ministry, or is it consolidated by the Ministry of Finance for the whole portfolio directly?
So the way the consolidation is done in Korea for those public institutions are done for institution based. So because IFRS applied for all those public institutions will prepare consolidated financial statement if it has its own subsidiary. But in case of consolidation into Korean government, which is actually have the ownership, consolidation is not done, partly because of a different standard are used. IFRS for public institutions and Korean government own government accounting standard for government entities. That's one technical reason. But behind of those difference, main intention of using those financial statement information is not for overall financial statement preparation covering all those entities, but Korean governments are using those consolidated financial statement for each institution for each performance evaluation purpose mainly, not entirely, but mainly. So as until now, there was not much of push for or toward the government-wide consolidated financial statement, including those public institutions. But we'll see how things will evolve going forward.
Thank you. Thank you. I hope this was satisfactory. Colleagues, I think we are now a bit out of time, but let's take the final. Yes, please.
May I add, please? In Korea, consolidated financial statements are prepared.
Ставить вместе консолидированной финансовой отчетности, а их не включат консолидированный финансовый отчет. Почему? Когда составляется консолидированный финансовый отчет на уровне сектора государственного управления, мы получаем такие финансовые показатели, которые не имеют коммерческого характера. Допустим, когда мы определяем финансовые результаты как прибыль и убыток, в данный момент же это не чисто коммерческого характера, никакого коммерческого характера не имеет. А когда составляем на уровне государственных предприятий, тоже самые показатели, значит, оно чисто коммерческие. Когда мы будем объединять все эти показатели, получаем общие показатели, значит, на уровне правительства, на уровне консолидированного финансового.
So what is the nature of these indicators and what is dominating their commercial nature or non-commercial nature? How can we determine this? And then we have to disclose the information. The information is disclosed. It is more difficult to disclose information. It is a difficult matter. And second, when the consumer looks at the results, maybe the result will be the loss that was made. And the question is raised, where does this loss come from? Is this the blame for the Minister of Education, the Minister of Economy, of the state-owned enterprise? How can we determine this? Thank you for your comment. It is a very right and useful comment.
Oh, so the translation is not working, right? So what do we do? Oh, summarize in English. Okay. Okay, the point was given that it's very difficult to consolidate because of the nature of activities of the government itself and SOEs. So I'll give you just very briefly my own opinion about this. Well, there is IPSAS standards which require, so if you have SOEs in your portfolio, this means that the government owns something. So you have to put them in the balance sheet somehow and at some point, right? Maybe the way to start with is to prepare some disclosure note in addition to financial statements of the government and say, here are a portfolio of SOEs, this is the net assets, this is some basic information. Then over time, you can include them in the balance sheet using the IPSAS standards as a consolidation method. Of course, it's very difficult to consolidate, very difficult to reconcile accounting practices and accounting policies, but it doesn't mean that it's not possible to do. It is possible to do, but it's highly technically intensive exercise. So, and this is why we are here today talking about it, because it's not very easy. But I guess the whole point is that if the government is owning something, the government balance sheet should reflect it. So you need to find a way how to do it properly and when to do it. So if the system is not ready now, maybe there are some transition provisions that you can foresee, but basically showing to the population that the government balance sheet looks like this, and there is something else in addition to that, and then you can put it in the balance sheet at some point. Colleagues, thank you so much. Before we break for lunch, look at the screen behind you. This is about transfers, taxes for going to the airport. You can look now or later, it will be there. And now we're breaking for lunch until 2 o'clock. Thank you.
So welcome back to the last two sessions of the day. After those two sessions, we will have the best session of the day, which will be glue wine in the Christmas market. So please bear with us. So on behalf of EduCop and PULSAR in general, let me welcome you again. This part of the workshop will be devoted, the last three sessions, to the education community of practice topics. So we will have two sessions today and one tomorrow that will discuss the first session that we will start with today. We'll discuss the latest changes on international education standards. Then this session will be followed by a second session showcasing practical examples of how to frame public sector accounting courses into education programs at the university level. and we will hear from European experience, from Portugal, Spain, Norway. Then tomorrow we will have the third EduCop session that will share the results of the latest survey on the impact of PULSAR program in public sector accounting education, and also experience for 4 of our own EduCop countries, Armenia, North Macedonia, Croatia, and Ukraine, discussing how public sector accounting education programs are being upgraded. Without further ado, we will start our first session, which is updates on changes on international education standards. We have today in our panel Natalia Konovalenko, a team member from our EduCop community of practice, who is joined by Michelle Caldwell. She's accountancy education principal at IFAC. And Greg Owens, who's a long-standing member of the International Accountancy Education Panel. So Natalia, the floor is yours.
Thank you very much, Jose. Good afternoon, colleagues. I hope you had a good lunch and you will stay awake for these 2 sessions going forward. So we continue discussion of the sustainability reporting, but now from the perspective of the accountancy profession capacity building. For the EduCop members, it's important to understand what new competencies and skills need to be integrated into their education programs to meet the new requirements. And to start with this session, I would like to first link the upcoming discussion to our previous EduCop session that we had in June in Montenegro, where we discussed the proposed amendments to the international education standards relating to sustainability. And I will start with slides. So in April 2024, the exposure draft on the proposed revisions to international education standards 2nd, 3rd, and 4th relating to sustainability was issued. And then in June 2024, we had a discussion of the proposed changes within PULSAR EduCop workshop, where most of you were present. And within that workshop, Michelle outlined how the proposed amendments were developed, what approaches were used during development of these proposed amendments, which stakeholders were involved, and actually the substance of the proposed amendments as well. So July 24th was the deadline for submission of feedback, and we all agreed to provide the consolidated feedback from our EduCop members. So as we discussed during the meeting in June, this topic is of high interest for our EduCop members. So we did receive a number of responses from you, and I will talk about it a little bit later as well. But first, let me quickly summarize the responses that we received, and then we will move on to our distinguished speakers of this session to talk about further development and with discussion of the feedback received, next steps to be done with introducing and promoting of these amendments of sustainability related aspects into education standards. So let me start with the composition of respondents. And as you can see on this slide, 71% of responses were received from the academic bodies and universities, and 29% of responses were received from the professional accountancy organizations. So we do not see regulators among the respondents here, which is perhaps reasonable as the standards are aimed mostly at the training providers at both IPD and CPD levels. So, and it is good that we can observe both groups here among the respondents. And now, the questionnaire consisted of 3 parts. Part A was information on the respondent, Part B, specific questions, and Part C, some general comments. So on this chart, you may see the responses to the first 4 questions of the Part B. And the first question, do you support the proposed revisions to IAS 2nd, 3rd, and 4th for sustainability? And you can see that 100% of respondents did support these revisions and these amendments. And the question second, was if the sustainability learning outcomes are sufficient and appropriate, and if they meet expectations for aspiring professional accountants. And you can see on the slide that 83% agreed and 17% neither agreed nor disagreed. And question 3A was, do you support the proposal to create a new competence area for assurance? And if not, please explain. So 83% agreed with this proposal, and 17% again neither agreed nor disagreed. And comments were mostly that it's still need further studies and research on advantages and disadvantages relating to implementation of this proposed amendment. And question 3B. Yeah, question 3B is on this slide. Is the level of the proposed assurance competence area and learning outcomes at foundational level appropriate for aspiring for professional accountants? And you can see on the slide that 64% agreed with no comments, 17% neither agreed nor disagreed, and 17% agreed with comments. And one of the comment was that competence area for assurance should be separated. Now we move to the next slide, and here we have two questions more from the part B of the questionnaire, which are there any terms within the new and revised learning outcomes of IAS second, third, and fourth, which require further clarification. So 65% of respondents agreed that further clarification is needed. And the last question of part B was, do you believe the adoption and implementation of the proposed revised IAS second, third, and fourth, including will present any challenges for your organization? So more than 80% of respondents in our slide, as you can see, because 50% agreed with no comments and more than 30% agreed with comments. So in total, we have more than 80% of respondents agreed that these amendments will really present challenges for their organization when they are being introduced. So let me summarize the responses received from our EduCop members as general comments. The revision to IAS relating to sustainability are 100% supported by our EduCop members, which is good. And EduCop members considered proposed sustainability learning outcome as sufficient and as appropriate. And proposal to create a new competence area for assurance is also broadly supported. So common challenges highlighted by most of the respondents are lack of knowledge of the subject matter, lack of relevant materials to get this knowledge from, which is evident because this area is relatively new, not completely new, but relatively new. And lack of experience in application of the standards, and therefore no practical case studies, which is another area, but it's also related to the first one. And sometimes it is also lack of support unless regulatory requirements are in place. For instance, our EduCop members are already well aware of this topic and is trying to promote it within their institutions and university and PAOs, etc. But sometimes it is not supported unless there is any regulation already in place and unless they're required to introduce the changes. So there may be some reluctance. So that's another common challenge. And therefore, most of respondents highlighted the need for common syllabi on sustainability-related topics, the need for learning materials, practical examples, and case studies, and the need for training courses and training for practitioners to promote knowledge of this topic. So these are a summary of responses that we received from our EduCop members and shared with Michelle, and we thank everyone who filled in the questionnaire and submitted their feedback even during the summer period, which is usually quite hard for academicians, for universities. And but since we didn't receive 100% of responses, we understand that this may be justified because some of EDUCOP members represent ministries of finance, and this questionnaires was not supposed for them, of course, but still the number of responses could be significantly higher. So we ask you to please be responsive going forward to such a request from us, because, well, actually, this is part of your task as EDUCOP members, as your homework, if you wish, and it's really helped us to better analyze issues that you have, that you face, and to address them as per your needs. So thank you very much. These are results of the feedback provided, and passing over to Michelle.
Is it like this? Sorry, I think they're just waiting for the slides to load. So let me just go back. So thank you, Natalia and Jose, again, from the World Bank in general, for inviting us to here. It's really important from an IFAC perspective to be part of the conversation that EDUCOP has, and we're really delighted to be here today to give you an update on what's happening with the education standards. So just as a reminder, just as a refresher for everyone, the education standards, they really cover the lifespan of an accountant's education. So they start from the entry into the profession, and then in the middle there, you'll see the initial professional development as well. So this is such a key part, and the education standard updates for sustainability are part of that, but also we'll touch on 6. We just wanted to remind everyone of the flow because we've got a couple projects that are going on in touching that. So today we'll touch on projects that cover 2, 3, and 4. 6, so in the IPD space, so the initial professional development that all accountants go through as part of their professional competence, but also a new project that's just been kicked off that's centered on IAS 8 on audit engagement partners and their professional competence. So we will go through 6 sustainability and 8 today. And 6. So just for background, so IAS 6, and this one is the furthest along of those 3 projects. IAS 6 covers the formal assessment of professional competence, so that endpoint or during points of assessment that your students or people who are qualifying to become accountants go through. And we took a viewpoint in the panel after the pandemic about whether IAS 6 was fit for purpose, because as you'll all unfortunately remember how the world came to a stop with the pandemic, but what didn't come to a stop was life and assessments. Probably the students would have appreciated if they didn't have to have assessments, but we had to find new ways to do assessments hybrid and online. And so IAS 6 wasn't, when it was written originally, wasn't written to conceptualize that situation. It also hadn't been reviewed for a number of years, so we needed to modernize the principles that were within it. So alongside the sustainability exposure draft, there was also an exposure draft issued on IAS 6 in April. And we were really delighted with the responses that we had internationally. We have the results on there. We had 25 responses all around the world. And for a sort of technical topic like assessments, this is a really great engagement. And so we thank everyone who's participated. What I'll say about those proposals as well is that there was so much support for it. So you'll see up there, 96% of responses were supportive of the IAS 6 proposals, which we were really happy and pleased to see that they had reached the mark. There were 88% of the responses found the explanatory materials, the glossary materials, the conforming amendments also helpful. But, you know, that suggests that there was some room for improvement and things to revise within it too. And 44% overall anticipated some challenges with implementation. So this had led to the working group that the panel has set up to review and to consider how to deal with those comment letters that we had and I'll go into the final proposals now of where we've ended up with it. So what IAS 6 is introducing is 2 new principles, one on authenticity in assessments. So that is a principle around ensuring that assessments resemble the work that a professional accountant would do, because that establishes to a higher level how competent an aspiring professional accountant will be in their job. Because if they're doing assessments that resemble the real world and the sort of tasks they need to do for clients, that really can be a extremely good way of validating their competence. The other new principle is on integrity. And I don't think it surprises anyone in the room how important integrity is to the heart of any assessment, making sure that they're designed and delivered to ensure that the right person and that there's security around the assessment. It's just a key new principle with it. And I think especially in an online environment, integrity is incredibly important. Then we have updated and modernized the principle of equity. So those of you who will have looked at the ED will have said, hey, but there was accessibility and inclusivity as separate principles. We received feedback that actually accessibility and inclusivity are part of equity. And in fact, actually, we had talked about it in two different ways in the proposal. So we've clarified in response to queries, and we've put accessibility and inclusivity into equity, which is an existing principle, and we've gone through and we've checked through the examples and tidied that up to make it sure so it's much clearer. Now, some of the other feedback on that clarity point was really about the standard. Could it be improved with its language and how it's to be used? So we actually had feedback from quite a small firm that pointed out, actually, we're not sure about how to prioritize these principles. And we realized the drafting could actually be much clearer. Oh, sorry, the translation, sorry. I'm just aware the time is short. So. No. Yeah. So on the principles, we've done reordering to emphasize that each principle is equal to each other, that no principle is, going to be prioritized over the other one. So that's a clarity point. We've also reviewed all the examples, clarified the language, aiming for simple English throughout the whole thing, which I think when you'll see the final IAS 6, you'll see that it's an improvement overall on that. And we've just worked on that modernization piece as a panel. So this November meeting that we had with the panel, they reviewed, worked their way line by line through paragraph by paragraph on the standard, and they have now endorsed the content of that proposal. So the next step is there's a few minor tweaks. We'll bring it to IFAC board in February, and the aim is that IFAC board will, if they're satisfied, fingers crossed, we don't want to jinx it, but they'll approve the updates at their February 2025 meeting. And then that will come into effect from July 1st, 2026. So that longer implementation period to allow people to embed that further. We're going to take questions at the end for all of these as well. So we'll skip over and move into the sustainability reporting project, which I'm delighted to hand over to Greg Owens, who not only has been a long-standing panel member, but has been one of the crucial members of the sustainability working group.
Thanks. Hello and good afternoon to everyone. As is typical for these sorts of things, I am a panel member, but I'm not professing to speak on behalf of the whole panel. Also, I need to disclaim expressing any opinions in relation to my day job, which is an audit director in our global office at BDO. So, sustainability. And just going back and thinking about the importance of this subject, and Natalia did a fantastic job there, really highlighting this is core to our profession at the moment. And we knew as a panel, it's an area we can't pretend is not happening. It's been like tectonic plates are shifting around the globe, and different pockets of activity are happening with CSRD and different jurisdictions exploring what's meant by ESG and other types of sustainability reporting. And I think it's fair to say as a panel, we really actively invested in this. So to the point where Michelle has been our guide throughout this whole process, but we had 7 panel members involved in this particular project. That's a third of the panel, which really shows the investment we put into this particular project. And it was really fantastic that as a group, you also managed to solicit your views and share those with us. We really do value input whenever we're getting in the realms of standard setting. We need to hear the audience. We don't want to set standards in a vacuum. So thank you for providing that feedback. Now, in terms of the problem we were trying to solve, and it's really important as a standard setter that you don't get into the realms of scope creep. We could have tried to solve everything in this standard, and particularly because we were looking at ISs 2, 3, and 4, which are basically the technical areas, the professional skills, and the professional values, ethics, and attitudes. That's a huge swathe of the syllabi and curriculum that you and others have out there for your aspiring professional accountants. So we really had to step back and think, what's the problem we're trying to solve? And you can see it here on screen. We wanted to define the competence in sustainability reporting and assurance that's needed by every professional accountant. It's no small feat. And it's not like we can just wave a magic Harry Potter style wand and cascade those skills and competencies across all of our fellow professional accountants, but we had to start somewhere. And where we started was the revisions to IESs 2, 3, and 4. Now, we could have actually just dived into each of those as a starting point, but we took a slightly nuanced approach to this. We actually looked at the competence that you need to be able to deliver that reporting and assurance areas. And we started by thinking about business acumen. So thinking about it from a development perspective, thinking about the strategy of an entity, why they're needing this data, maybe how that data is being accessed, maybe the ability to look at the appropriateness of that data in a business. So really thinking through from an entity perspective, thinking about the users of that entity information. The second area is that behavioral competence buckets. So really thinking about, well, with sustainability, what extra skills, what current skills need to be built on to deliver this as an aspiring professional accountant and as a future professional accountant? And for us, the message that we heard really loudly and clearly through lots of discussions and focus groups, a literature review, surveys, contact with people like yourselves and your organizations, it was about increased collaboration. It was about multidisciplinary teams. It's about working, maybe shock horror, with non-professional accountants who may be experts in sustainability. And how's that going to work when you're looking at the information, the data that they're producing? And it's about a different way of looking at sets of financial statements and maybe non-financial data. And that brought us into our third bucket, which is really data and information, thinking through the metrics, the targets that are likely to be used. When we saw that earlier presentation, you saw lots of different potential types of kind of ESG activity. It's not just about the financial, it's about the non-financial data as well. So thinking, well, what does that mean for someone who's training to become a professional accountant? Our fourth element was around reporting. So what is it that stakeholders, users, public sector bodies, what is it that people need to be able to understand this data? And we're very mindful. There's lots of standards out there. There's IFRS S1 and 2. There's the ISA 5000 happening in the audit landscape. Our colleagues on the IASBA board are looking at this very much from an ethics lens and perspective. So there's a lot going on. And as Natalia alluded to, this area is still kind of forming in many respects as well. And I know from previous life as an audit person, when new standards come out in that first year, you're kind of absorbing it, you're trying to understand it. Year 2, you're probably getting a really good grasp of the new standard. Year 3, you're looking at what other people are doing to see if you're still in line with where that standard's going. There's more guidance out there at that point in time. So things evolve, and reporting is part of that landscape that may well evolve. And the final bucket was assurance. And this is kind of a really tough area. And Michelle alluded to it and Natalia alluded to it, really separating out and giving assurance its due credit. And I speak as someone who was involved in the first set of education standard updates way back in 2012. We kept audit and assurance combined together. And we always felt at the time that assurance was kind of like the poor relation. It's kind of the forgotten about piece. But actually, we as a panel took a slightly different view. Assurance is the foundation of everything you understand. Audit is just but one part of that assurance kind of jigsaw. So we actually wanted to give it its just desserts, its real credence. And that's why we looked at exploring that division. And throughout this whole process, as you can see on the slide, ethics has been completely foundational, and all of you will have seen out there and in your responses the kind of concerns around greenwashing and other activities, and how might entity management be biased in a certain way when they're making those underlying assumptions about the data that they're looking, maybe the people producing that data, what biases have they got inherently in their processes. So as professional accountants, we need to step back and think through the ethical angle as well. Now, we had lots of responses. I think at this point I was going to hand over to Michelle for a quick deep dive into the data.
Yeah, we've had such a great response on the sustainability one. So you'll see the European number is quite high. That's because of a lot of you in the room who's replied. We couldn't thank you more. It is so important for us to hear everyone's voices on these standards. And so we were delighted when we got all the PULSAR ones through. And one of the other things that made us so happy is that we've got this little note here around there. 95% of the responses, even though it wasn't a question, explicitly wrote in, we support sustainability, whether that was a note in their first question response or later. The only 5%, the two that didn't actually put an answer, it was just because they didn't write anything in, they just did annotated markups. So I think it implies also support. So it shows this importance across the profession, the recognition of sustainability reporting, and that's a future integral part of what it is to be an accountant and what we report on. We also had, so as I've said, the 95% that were supportive, 88% of the responses supportive of the proposals. You'll have seen in the numbers that Natalia presented, that's very similar, very strong support. We also had 75% with views that the IPD level was right. There were obviously some differences on that remaining 25, but they were a bit of equal numbers of they go not far enough and maybe a little too far. So we had this question of, is it too hot, too cold? Is it just right? And so within that spread of people who didn't agree, you actually had a balanced response. It wasn't skewed one direction of this is way too far or this is not far enough within those. So we've been looking at that in the overall context as we've been reviewing and thinking about how we respond to the comments. The other thing on assurance, so this was a really important question. And I think in June, you'll remember we said, assurance is the area that we're most interested in getting the views on, because we're not sure if we've got it right. As Greg said, is it right to separate it out? And have we got the level right? So what was really interesting was the wide support for creating the new competence area. Where we have a bit more disagreement was actually, should it be at foundation? So the other responses were pushing that it would be further. Actually, in those who supported it being foundational, we also had 8 responses that said, foundation now, but in a couple years, let's revise it up to intermediate. So it's a watch this space. And I think as the challenges that Natalia mentioned allude to, as people acquire that skills, knowledge, experience, then maybe in that space we'll need to move up, especially as assurance becomes more of a requirement in certain jurisdictions. And indeed in those areas where it may be that professional accounting organizations increase the level in their own local curriculums, because this is, remember, a global baseline. So we would be supportive of that on an individual basis. Now, we did have 61% of response is saying, can we have some clarification around terms? And this is something we are thinking about in the panel, but also IFAC as well, about what we can do to support people and making sure that the standards where we have definitions are the standards provide educationally based definitions, but then what's the other guidance? What's the explanatory material that supports that? So it's something we're actively thinking through. And then about half the responses said this is going to be challenging. So that's an interesting split where you get different views in terms of who's more confident about implementing it or not. And I think it's one of these things that for those who are feeling it's not a challenge, we'll have to go back and we'll engage with the community so they can provide examples to help everyone move forward together. So that's a bit of a summary of those overall questions and the responses from a global perspective. So I'm going to pass on to Greg to hear about some of the themes that the working group has been addressing.
I think that's the last time we swap over. So apologies for this kind of in-out approach to this. So as Michelle alluded to, there's kind of 5 key areas that we wanted to talk to you today. One of those she's already referenced, which is this balance of proposals. And whenever a public body gets involved in standard setting, you always end up with kind of a spectrum of responses. Some people think you didn't quite go far enough. Others think actually you could have gone a lot further. And sustainability is no exception. If anything, it is more likely to be more variable in the responses we get through because of those different jurisdictional experiences that various public accounting organisations are going through. So we kind of expected that range. We pretty much sticking to our guns on where we've landed on this set of changes. And you'll see that hopefully as we get to finalisation of these standards. But we think we hit the mark in the right place in the middle of where aspiring professional accountants need to be. There are other challenges out there. We are very mindful as a panel that we've been very much focused on initial professional development. And let's think about the other 40 years of your professional careers as an accountant. So what needs to come next in terms of guidance maybe for continuing professional development for that CPD? But we think we've got where we need to be in terms of the body of the standards. But as Michelle's alluded to already, where we've had that really helpful information, that steer, that request more clarity that Natalia referenced as well. So we will be expanding the explanatory materials to the standards. And I say this as someone who uses the standards in my own international network, use it wearing different hats in my day job. You know, it's really important, and we keep on saying this as a panel, that there's not a secret code to the standards, that there is complete clarity, particularly because we're assessing aspiring professional accountants. So those learning outcomes need to be really crystal clear. So we don't want a secret code. We don't want a word to mean 3 different things. As Michelle alluded to, we need to tighten up the glossary. If there's sustainability related terms, we need to get in there with clarity, and we'll very much look at the feedback that came through from yourselves and others to really sharpen up those definitions. So that balance piece, I think we've addressed as a panel. The assurance and audit competence area, we always kind of knew this would provoke, and some people just did not like this. Some people like audit and assurance as is. Maybe it's accountants, we just don't like change. Who knows? But ultimately, we are keeping assurance and audit separately, and I use that phrasing assurance and audit very markedly. So we are looking at the ordering in the learning outcomes and the competence areas. We have been revisiting lots and lots of times the verbs that are being used. So people very rightly pointed out that some verbs indicate a high level, or maybe some indicate a very low level. We're still going through that process as a working group. So a lot of work has been done on that particular area. We had a really pointed discussion around, well, you really need to shine a spotlight on what the difference is between reasonable and limited assurance. And that's going to be increasingly important that professional accountants really understand that. And we're also very mindful that not everyone who's aspiring to become a professional accountant is going to be exposed to assurance type activity other than audit, maybe in their first few years, because this is still an emerging area. So again, we wanted to keep very tightly towards the changes and not get too excited about these areas. So we are updating the ordering, and we have been looking at the outcomes within those 2 areas. On connectivity, we had a really useful set of comments coming back about the importance of connected information. And so that when people are reading financial statements or reading sustainability reports or other disclosures, people are connecting the dots, not just the auditors in the room, but everyone else. All professional accountants can see those linkages of information. So we have proposed some changes to the financial accounting reporting section, as well as assurance, just to really highlight the importance of that connected information. And then clarity of language. As with any body of standards, we get lots and lots of feedback on the words we've used, the verbs we've selected, some of which are in Bloom's taxonomy, some of which are not deliberately. We look at all of that feedback, whether it's the very smallest respondent who's an individual, right the way through to a multi-global accounting firm. So we look at everyone. Everybody's comments are just as valid when we're going through that process. We have identified a to-do list, which Michelle is our convener of. She's our custodian of that. So we've had some great ideas for additional guidance. We've logged that, we've captured it. That will be our next step as a panel when we get out of the standard setting mode. We've updated references, as we've noted there, to general purpose financial reports. We had a bit of feedback on the concept of systems thinking. That had been introduced to the panel by some colleagues more from an academic perspective. We have a range of panel members, all from academia to regulators to accounting firms, etc., to PAOs. So that particular concept seemed to rile quite a few respondents. So it has gone in terms of systems thinking, but again, we're looking at how we can pull out that concept of really understanding the system and connecting the dots within a financial reporting and non-financial reporting system as well. And then governance, and this is kind of the surprise of the feedback that we had. Now, I'm very mindful, and someone called me long-serving and long-standing, so I've been involved with the predecessor to the International Panel on Accountancy Education since 2008, which is the International Accounting Education Standards Board. So in my 16 years, we've kind of modified our working and our approach and the purpose of now the panel. And I don't think when the panel was set up that it was necessarily set up to get into standard setting mode. We are there, And we had some challenges in the respondents around public interest perspectives. What's the due process you've gone through to produce these standards? You're no longer a standard setting board. What does that mean in terms of your own quality control that you've got in place? So as a result of that, not surprising feedback, we are updating our framework for standards development, which we'll be issuing. We'll produce some more information on the kind of process flow that we go, just to show the rigorousness of how we do develop these standards. And it's worth noting it isn't just the panel that gets in a room and does this. We have the sustainability working group that meets now on a weekly basis, usually on a Friday for 2 hours, and we do the deep dive analysis. Sometimes we'll only get through 2 or 3 learning outcomes in those 2 hours because we really kick the tires on it. And also within the panel, we have a drafting working group that's separate from this group, analyses the wording that's been used, checks conformity with the other IPD standards as well. So there's a lot of kind of work that goes, and we need to publicise that more as a panel. So that's an action on us. Timeline and next steps. Let's be optimistic. We are working to complete, hopefully in the next month or so, and you'll see that we're aiming to effectively get this particular body of standards approved for the January 2025 meeting of the board and the panel. If we decide to re-expose, that will be a decision we'll take at a later point in time. We are, as panel members, jealously guarding our decision on that. So we look at all the changes that came in after exposure. We'll make a decision as to whether we need to expose. You'll see that we're effectively aiming for the February 2024 meeting to get that IFAC board approval. If we need to expose, that might move slightly further out. And you'll see there the date is June 2025. All things being equal, assuming we get approval in, let's say, Q1 of 2025, then it will become an effective standard from July 1st, 2026. But it is worth noting, and Michelle alluded to this, there's nothing to stop you early adopting. So where your curriculum's already there, where you're already making changes, take advantage of that and start to do that work earlier on. Okay, we're going to park questions on that until right at the end. I'm going to do a very brief advert for an exciting change, and I say this as an auditor, and that's that the next set of standards development that we're looking at is around IES 8. And for those of you unfamiliar with that particular standard, it is basically CPD for engagement partners. So, and I say this as an auditor, it's really important as auditors, we have the right people with the right skills, doing the right work at the right time. Now, I can't affect all of that as a standard setter. The IASB will look after some of that. Your PAOs will look after some of that. Local regulators will look after some of that. But from a panel perspective, the bit we can influence are the skills piece. And certainly from a public interest perspective, IES 8 has been critical in giving confidence to the work that engagement partners do. And you'll see there that it's been posited at the moment around financial audits, particularly based on historical financial information and those other assurance and related services. Now, the real hook is into continuing professional development. So that very last sentence that talks about develop and maintain, that's the exact wording that you'll see in IES 7 on CPD. So that's kind of the anchor. And all this standard is doing, saying you have to do CPD, but if you're an engagement partner, there's certain types of CPD that you have to do. Now, as many of you will know, there's been a plethora of quality management standards, particularly issued by the IASB, ISQM1 with its focus on systems of quality management, ISO 220 revised, again looking at quality management for audits of financial statements. So there's been changes in the underlying standards, and it's important that IES 8 reflects that changing landscape because new responsibilities have been placed on engagement partners. And as a panel, we need to look at what skills gap does that create. Secondly, we know already that through IES 7, there's the hook to CPD, but CPD also has an element around practical experience. And that's an area that we know IES 8 has never been too clear on. So there's a bit of a gap there that we need to look at. And thirdly, as with any standard, this particular standard, it's quite unusual because we know right across the world, different jurisdictions have very different stakeholder involvement. So my own, it goes through my own PAO, and that's how I get my license to sign off auditor reports. In other jurisdictions, it might come from a different Ministry of Finance or a different regulator that gives you that authority. So there's different actors involved in this whole process. So again, we need to think about what the changes might mean for them.
Now, as a standard, it very much builds on all of the earlier standards. So the foundations of IES 2, 3, and 4, and all those sustainability changes that we're about to put through, they flow through to IES 8 and what it means from an engagement partner skill perspective. So there's a huge build piece that we need to do there. Once we've finished the movement on IES 2, 3, and 4, we've got some housekeeping to do, but we've also got some maintenance to do to make sure it's fit for purpose for this particular century. And at the bottom there, we've sneakily put in some other things to consider there around what does it mean to manage a portfolio of audit engagements? What about changes to auditing and financial reporting standards and changes to those competence areas? So a lot to think through on just one particular standard. My clickers stopped working. This diagram, for those of you who've read IES 8 will understand, it basically shows the kind of ecosystem around engagement partners, all the different existing standards that kind of feed into what it means to be an engagement partner. Those areas will need to be looked at again because of changes in IAASB and IESB standards. But also we've noticed there that regulators also have an oversight role in many jurisdictions. So we're going to need to engage with them as part of that process. And then the third element to have a think about is that progressive nature of changes in professional competence. So IES 8 is focused on what it means to be an engagement partner and what the competence is you are required to have to be able to perform that to a defined standard. And so we know that they are operating in environments of considerable change. That's not just sustainability. That's also AI and audit data analytics and what that means to be an engagement partner on those engagements. It's about multidisciplinary teams. So there is a link back to IESs 2, 3, and 4, what it means to now have a new group audit standard on ISO 600 revised, when component auditors are now part of your engagement team and how you have the skills to assess their competence. So there's a lot going on in this particular space, and we know engagement partners are kind of at the forefront in the public mind. So the need for change is clear. I guess the bit we haven't yet wrestled with is writing out our project proposal. And so we have had some early discussions with the panel. We have a very small working group currently working through a project proposal, but clearly the outputs from sustainability need to be addressed and updated. I've noted there the updates for the ISQM and ISO 220 revised standards, and then those conceptual questions about what it means to be an engagement partner in the 21st century. The purpose and use of the standard, has that shifted in the last 6 or 7 years since we first published it? And finally, what does it mean from a sustainability assurance versus engagement partner perspective? So lots of thinking still to be done. We are in the early stages, but it is a case of watch this space for more information to come. Now, we do have a whole series of questions. We're not going to ask you to answer those today, but obviously as part of the Q&A, feel free to raise any questions. But I think Natalia and Jose are going to share these questions as part of a kind of post-event survey. And I really would encourage you to go away, open up the current IES 8, have a quick look at it, and just answer these questions as truthfully and honestly as you can. We're grateful for any input we get. I'm sure once we get into project proposal stages, we will start opening our gates to lots of outreach activities and focus groups. And I'm sure this group will be very much part of that as well. So that's it on IES 8. Next steps, project proposal, panel to start their review and think through the scope. And we don't want scope creeps. It's always very important we stick to our knitting on this. And then finally, we'll get into information gathering activities. So that's it from me. I think it's a Q&A now.
Thank you very much. A big applause for Ray. Thank you very much, colleagues. So we have a few minutes for questions and answers. There are microphones in the room. If I may, I would like to start with the first question regarding the survey and the needs of our colleagues on this process of upgrading their knowledge, upskilling. And in the survey, one of the main main conclusions is that there will be a lot of challenges to implement this. And to address those challenges, the key demands are around training of trainers, updated model syllabi, clarification of terms. So our question is whether IFAC is considering to support also maybe through the Knowledge Gateway platform this process.
Yeah, absolutely. So from an IFAC point of view, we're really aware that there is a huge gap right now. It's something that IFAC, when it engages with standard setting bodies, all around the, we're all having this conversation, from the reporting side to the assurance to the ethics, to even local jurisdictions interpretations of that. Everyone's having that question because they talk about a journey, but it's one where we're running really fast and we're all on the same sort of path. And some people are further ahead, and that's where the international community of, that IFAC can really bring together is really helpful. So we are thinking about where those gaps are, because we want to make sure we're not repeating things that others are doing. There's some great resources out there. Jose, thank you for mentioning the Knowledge Gateway. So if you're on IFAC's website, our Knowledge Gateway has already started compiling different resources, things to support people. So please have a check. There's a sustainability area, but other resources that are also useful, like the IFRS has a great hub for reporting, which for most people is their first interaction with it, and then as they'll move through. And I know that colleagues at IESBA and IAASB, they plan on publishing things too, and we'll continue to convene with them to determine what sort of materials are helpful. So we're always happy to have feedback too. About the sort of formats and things. So anything you want to drop us a note, do let us know in terms of challenges. And I can't promise we'll be able to do everything because we have restraints on our time, but to the extent we know when there are issues or questions, it helps us to guide what we're going to prioritize.
Thank you, Michelle. We all recognize it's a titanic job to try to support this. The good thing is that there are several players trying to support. So also within PULSAR, we produce knowledge products to share, and we can also and we will share that so they can be also put into the Knowledge Gateway if they are interesting for the accountancy profession. So any question? Yes. Edona.
Hello, everyone. I'm Edona Periusi from University of Pristina. I have a question for Michelle. Michelle, since we know that IESs and everything is changing relating to sustainability, are we going to expect changes in quality assurance as well for services related to sustainability? And as well, should IESs include some skills and competencies related to quality assurance as well?
Thank you. Yeah, so one of the big areas of the change that we're seeing is around the assurance side. So the plan and the support has been widely around separating assurance out and doing a really focused look on the learning outcomes that are in there. I think from what we had proposed, we've had feedback on ways to improve that and to make sure it sort of mirrors, but at a lower level, the audit learnings. So that'll definitely be a focus. One interesting point that we had flagged, because we had specifically called out sustainability assurance, we did have feedback actually that for a lot of jurisdictions, sustainability assurance isn't the only important type of assurance. So concerns that by calling sustainability out specifically into it would mean that it was actually more narrow in terms of the learning outcomes. So we're definitely augmenting out what assurance is, the coverage of assurance as a topic in the IESs. But the specificity around sustainability, we have to be careful that we don't accidentally narrow the learning outcomes too much for other jurisdictions where it's a key element already of what an accountant does.
Thank you very much.
Thank you, Michelle.
Можно?
Thank you for your presentation. It was very interesting. As I mentioned in the first session, it is time that these issues are very timely. 2 years ago, all participants at the event, probably just like us, just like me, when we discussed the sustainability reporting, for some reason, our basis was it will not be the issue for the Ministry of Finance because the range is so wide. We have so many indicators for the reporting. But anyway, this caught up to us. Now we have to do it, and we are already doing this. I mentioned at the first session that in Ukraine we adopted the strategy, and the deadlines for implementation of strategy are very tight. And a question on the merits. Now we have the situation when we already need to report according to sustainability standards for big listed companies. According to the directive, they have more than 500 employees. And if the strategy is adopted, it is adopted by the Ministry of Finance. Who should be implementing it? It means the accountant should be implementing this. I was listening to you, and you always say accountant, accountant, accountant. It is clear. The auditor is higher professional level, and auditor has practical experience. This is clear. Now I'd like to ask you about material reports and matters that should be dealt with right now. In our strategy, we envisaged one of the matters that should be resolved at their interagency working group. It is the list of professions and stakeholders who, at the level of enterprise, should prepare the sustainability statements. The accountant is signing it. They do not provide all the indicators. They cannot know the data on environment, on environmental protection, on extraction, on population, and so on. Where we'll have some list of specialties that should be trained. At the moment, they're not ready for this. They prepare reporting on SDGs, on indicators, but it is not the same as sustainability reporting. So my question is, we'll have a dilemma. Now we discuss it, we will discuss it actively. We need to train universal accountants who will have a diploma on sustainability reporting, and will have instruction that this accountant should do everything for the same salary. They will have the same duties, but also in addition, they will have to be responsible for sustainability reporting. They will be doing internal control because there is external control and there is also internal control. And you mentioned it now. Or we need to take the option, and this is our inclination, that we don't need to be universal as an accountant. We need to create additional discipline, which will be additional profession, will have curricula for training different specialists for preparing high quality sustainability reporting. So there are two options. One option is universal accountant. Second option, training wide range of specialists for sustainability reporting. So what is your opinion about this? I apologize for taking too much time, but these are practical aspects. Thank you very much for your interesting presentation.
Great question.
We might do a tag team on this because there's a lot in that question, and thank you very much for your question. And I think it's raised a really interesting point, and I speak as someone who's a standard setter, as well as being an auditor and a professional accountant. And then you're setting standards that you keep on adding and adding and adding, and there's kind of like a ratchet effect, and curriculums just get more and more and more, and no one ever takes anything away. So I think there is a real challenge there, that if we're overlaying lots of extra skill requirements on sustainability, does that mean actually that in some jurisdictions there might be extra qualifications to get that level of deep understanding and expertise? And we're starting to see that in a number of PAOs globally, where they're starting to say, we'll teach everyone the basics, including some knowledge of sustainability, but we will give deeper dive certificates for people who are really going down specialist routes. We've joked in the panel, does that mean that we need an IAS 9 on what it means to be an assurance partner, not just a partner on audits of financial statements? So there's definitely more thinking to be done on this, but I take away your point, especially that there's a lot. And actually, there are non-professional accountants who might be much more involved in this process, who might not have the thinking that we approach it as professional accountants. So there's a danger that you've got two people with different languages who think they're talking the same language, but really are not talking the same language. So there's definitely an education piece there that we need to think about. So Michelle, did you have some comments?
And just building on what Greg said, one of the key features of what we're trying to do is actually around behavior. So a lot of it is technical, right? In terms of understanding the new types of data and information, the new ways of reporting the new standards itself. But actually, when you're working with, so I suspect what we'll see is, you know, that general approach, just like many accountants learn tax maybe, and they don't use, like, at least me, a UK accountant, learn tax, don't know anything about tax now. But it's that foundation of the language of the accountancy profession that you're building out at that IPD level, and having sustainability built into that will help them to have those conversations with the specialists, to have those conversations. And I think we'll see some accountants become deep specialists sustainability reporting. We'll see some that, you know, train and they don't use it very, you know, we'll see the degree to which they use it when they're involved in reporting or assurance. But we'll see that we'll see this diversity in terms of approach. I think being able to communicate and the behavioral skills, though, that's a really key thing we want to update with the IASs, and making sure that that's not forgotten, because communication is always the hardest thing in everything in life, and making sure we're all speaking the same language as we have translators now is very tricky within it. And when you mentioned about materiality as a concept, I mean, unpicking materiality in the sustainability context, it requires specialist knowledge more than anything. It's just going to be something we have to get up to speed, and is going to be challenging. But fortunately, there'll be good resources and support as we go along the way, hopefully, with it. But thank you for your question. It's a great one.
Thanks, Michelle.
Thank you.
We have one last question, or next to last, here in Armenia.
Thank you very much for presentation. So my question is not 100% connected with the presentation that you had, but it's very important. So it's a bit easy question than the last one. What do you think? Is it possible somehow to standardize, I mean, prohibit, allow, or to limit the use of AI in the process of accountant qualification education, especially when we are having online exams, online education? Maybe it's not the priority number one at this stage, but I'd like to have, if you have thoughts, we'll glad if you share with us your thoughts. Thank you.
Absolutely. So the panel is really interested in AI. AI is so it has changes to the way accountants work. So when you think about what they're training to be able to do and their competence, that's an interesting question. But there's also the question of how you use AI in teaching. Can you use AI to be more efficient? And also then there's the integrity question. So you'll see in the IAS 6, we actually put in, there's one example that mentions generative AI just as a sort of think about it in the context of integrity with responses. So it's such a wide-ranging thing. The panel has set up an innovation group to look at AI. It's just kicked off from our meeting in May in Bucharest, and is really working through and to think about what's happening on the AI front. So I don't know that we're in the standard setting side on it yet, because we always want to be cautious before we start opening up the standards. But it's a question around guidance, and it's something we've been talking about a lot in our meetings on it.
Own accounting systems, and talking to our global regulators, they've been asking us, how do your teams have the skills to audit those client AI systems, and do your clients even understand the AI that they're using? So I think there is always a danger with these topics that kind of blow up, that we feel, let's get it into the standard. And 5 years ago, we updated the standards for information and communications technology, and we had lots of requests for, can you insert blockchain? Because blockchain may well come and it may well go, but what's important are the underlying skills. So we did update things around judgment and looking at data and the automation bias piece. So I think there'll definitely be more areas around that behavioral piece we need to think about. But AI is very much here. And it's interesting to see the skills it is taking away, but also the space it's giving accountants to actually use better their existing skills around judgment and really understanding what they're seeing. So we see it as something that's definitely going to be for the future to think about, but we just don't want to plonk in AI, particularly in those technical standards. And we are very mindful these standards apply globally. And in certain jurisdictions, not everyone's at the same pace of change or has same access to that technology. So we kind of set the base principles, but it's definitely an area that we're probably going to revisit.
Thank you very much, Greg. Michelle, Natalia, a big applause for our panel, please.
Welcome to the second session of the Educational Communities of Practice. And this session will discuss practical examples and case studies of public sector accounting courses integrated into university educational program in European universities. This was actually one of key requests from you, our Educational Community of Practice members, and asking how the PSA courses are integrated into education program in different countries, how are they structured, what are they based on, and so on and so forth. So to discuss these questions, we have 4 speakers today, representing 3 countries from different parts of Europe, just literally different parts, just opposite. So we will have 3 wonderful countries, Norway, Portugal, and Spain. And our speakers will share their experience as to how the accountancy education systems in their country are developed, how PSA courses are integrated into these education systems, what are they based on, and structures, and what are learning materials used, etc. So we will start with Portugal. And I would like to invite Sheila Perez as our first speaker. And Sheila Perez represents the Portuguese Chartered Accountants Association. And we found the experience of Portugal to be really interesting for our EduCop members because the accountancy education at university and PAO level in this country is really integrated. It's like an university education is integral part of professional qualification, and it's automatically considered by the professional accountancy organization. So we know from many communications with you, from risk assessments that we did in many countries among these present countries, that this is quite an issue for many of you. So when communication between universities and professional accountancy organizations is not that smooth, not talking about even integration of the qualification, etc. So this experience, I hope, will help you to also look to this qualification from maybe different perspective or a different angle. And this system that will be presented right now is newly introduced in Portugal, and we understand that this took a lot of efforts of all the counterparts to build this system. So we'll appreciate if Sheila share with us your experience, how you did this in Portugal. So Sheila, I hope you are with us. You can hear us and see us.
Yes.
And
Can you hear me?
Great. So over to you. Thank you.
Okay, good afternoon. First of all, I would like to thank you on behalf of the Portuguese Chartered Accountants Association for this invitation to participate in this webinar. My name is Sheila Perez, and I work in the tax litigation service at OCC. So Professor Susana Jorge gently asked us if we were available to talk about how to become an accountant today in Portugal, and we were pleased to accept the opportunity to share the current admission procedure to the profession. Can we change for the next slide, please? Yes, thank you. So, first of all, these admission rules were modified as a result of legislative changes made by the Portuguese government regarding the general rules of functioning of professional associations. Many entities, including the European Commission, the OECD, the Portuguese Competition Authority, and numerous business people had long complained that the rules of admission to the professional orders were quite restrictive, which resulted in hindrance to the economic activity in Portugal. Therefore, in order to satisfy this demand, legislative changes were made. Can we change slide, please? So the underlying motives were fewer. I'm sorry, I think this slide is not updated. So I'll resume this slide 3 because I sent it last night, so I don't think it's updated. Yeah, this slide 3 was changed last night, so I don't think it.
Yeah, I think we did share it. Maybe maybe this is not the last one. Maybe it was not uploaded. Do you have a new version to upload? Are the changes significant, or we can?
No, we can. I can just talk about them. Yeah, it's just some motives. So I'll explain it. So the first one is fewer restrictions through elimination of barriers to access of professions, eliminating unnecessary waiting time and costs. More equality by ensuring greater justice and combating socioeconomic discrimination of new generations' access to professions regulated by professional orders. Less job insecurity, preventing internships from being a repetition of university training, unjustifiably postponing entry into the job market, and significantly increasing the costs of training. More transparency through the creation of an ombudsman to ensure the quality of services provided. More independence, creating a supervisory board that integrated personalities of recognized merit from outside the profession. And finally, achieve compliance with national and international recommendations. These changes were included in the government program, and they proved essential for the fulfillment of one of the most important reforms in the Portuguese Recovery and Resilience Plan. Change slide, please. Therefore, changes were made to the existing legal framework. Firstly, to the regulation that establishes the legal regime for the creation, organization, and functioning of professional public associations, and to the statute of the OCC, as well as regulations for application, internship, and professional exams. Change slide, please. In Article 9 of our statute, it is defined that the attribution of the professional title of certified public accountant, its use and exercise of acts expressly foreseen in the law for certified public accountants depends on the admission to the OCC. So how is this admission processed? The candidate must have the academic qualification required. He has to carry out curricular or professional internship or training, and finally obtain approval in the final internship or training exam. Change slide, please. Regarding academic qualification, it is required that candidates possess an academic degree in one of the following areas: business science, accounting, management, economics, finance, taxation, or other related areas. These courses that allow qualification are expressly indicated in the statute, right? Change slide, please. Moving on to the modes of admission. There are 3 options now, depending on the candidate's qualifications. The first one is a curricular internship or project or business case if these are integrated in the higher education course. Having this background, the candidate will only have to take a 16-hour training on ethics and deontology. Next slide. Option 2 will be for those who have a professional internship of at least 700 hours, which is previously subject to approval by the OCC, or a professional experience of 3 or more years in the area of accounting or taxation. In this case, the candidate will move directly to examination, which will cover these 4 professional subjects. accounting, accounting analytics, taxation, and ethics and deontology. Next slide.
Shayla, I'm sorry, just a second. Could you please swap the image of the speaker? Sorry, we just stopped seeing you, and I think we see. Okay, here you are back. Thank you.
Sorry.
Yes, I changed the slide.
Okay, so I'll continue. Finally, the third pathway, which applies to those who only have an academic degree. In this case, the trainee will have to complete training at the OCC for a minimum of 84 hours and a maximum of 6 months. And it must comprise 4 modules. Module 1, 16 hours of ethics and deontology. Module 2, 28 hours of internal operations. Module 3, 24 hours of foreign operations. And Module 4, 16 hours of corporate operations. The final in-person exams will vary depending on the module. There will be 2 hours long in the first option, 4 hours in the second option. And in option 3, candidates will be obliged to take a 2-hour exam after each module. Finally, I would like to present a table summarizing the pathways of admission, where we can visualize how simple it is to become an accountant. When this program started in October, we had around 5,000 candidates, and 65% of them succeed in the exams. So this is my presentation. I hope you enjoyed, and I thank you for your attention.
Thank you very much.
Thank you.
Thank you very much, Shayla. We hope you will have some time to stay with us during this session in case our colleagues have questions, or do you have to disconnect?
No, I can stay.
Oh, great. Thank you so much. Thank you so much. Okay, now we move on to the next presentation, and now we will have a combined presentation from Spain and again from Portugal. And let me invite to our distinguished speakers, Isabel Brusca and Suzanne Georgia. So Maria Isabel Brusca Aligarde, hopefully I pronounced this correctly, is a professor, economic faculty of University of Zaragoza. And Isabel Brusca is a professor in the Department of Accounting and Finance at the University of Zaragoza. She teaches public sector accounting and financial analysis in the economics and business faculty of the university. And Susanna Georgia is associated professor with habilitation at the Faculty of Economics of Universities of Coimbra, Portugal, and she is lecturer in business, financial accounting, and public sector accounting. Also, on behalf of myself, I just want to add that these two speakers are really very distinguished in public sector accounting, and they're among my personal favorite authors for quoting in my own research papers, which is also focusing on public sector accounting. So I really feel privileged for having them presenting within our educational community of practice today. So, dear Isabel, over to you.
Natalia, first of all, I would like to thank to the WorldBank and to the PULSAR group to invite us to present our case studies or our experiences in our respective countries. As Natalia explained, we will share the presentation. Here is our agenda. First of all, we will refer to the background. That is why we consider it interesting to include this area in our research field. And also, we'll refer to some previous studies that highlight the relevance of analyzing how universities are preparing public sector accounting for professionals. And then Susanna will explain a comparative study that is contained in a paper published in Public Money and Management, where we try to analyze what is the situation in several countries. After that, Susana will continue explaining what is the case of Portugal, how universities prepare for public sector accounting for professionals in Spain and in Portugal, and we'll finalize with the case of Spain, explaining also how universities prepare for public sector accounting. As for the background, please, next slide. What we have seen is that at the end, most of the European countries, and not only European, have embedded in important reforms after the new public management umbrella or even later, and are still animating the debate about accrual accounting, reforming public sector accounting, and especially in the framework of the European Union, we have also debate about the European public sector accounting standards, trying to implement a set of common standards for all the European Union member states, even if it's not clear when and how this set of accounting standards should be adapted. But in the end, what we saw is that it's important to know how different countries are introducing public sector accounting into degrees, into the syllabus, or on the different bachelor, masters, and so on studies at the university. We identify also this same challenge in the literature. Can you please go to the next slide? What we saw is that really the problems related to education in public sector are not something new, but opposite, there are already research that is focused on how universities include education in public sector accounting. But these studies were mainly in the United States context. Speaking between us, but also focusing on previous literature, and in particular in a study from 1977, we saw that a large disparity there was highlighted between different countries, and also how public sector accounting was included in business school programs, because at the end, most of the universities prepare for business studies. So what we saw is that there is limited interest by universities in including this type of courses, that is public sector accounting, sometimes due to the lack of financial resources, but also because of the lack of qualified faculty to provide lectures sometimes. That's what literature said. Also, another problem identified in the literature is that there is limited attraction exerted by government and accounting on students. That is, when they go to a business school university, what they want to learn is not public sector accounting, but business accounting. Then we, and also previous studies, identify that there is a limited coverage of public sector accounting issues in university programs in Australia, New Zealand, Canada, United Kingdom, United States, but also in Europe. In fact, there is a forthcoming study that emphasizes this problem. That's because we decide to develop a comparative study that is going to present later Susanna. Can you move to the next? So at the end, it seems that there is consensus that accounting education is in the midst of a reform before, but also now, that wants to address some deficiencies associated with the dominance of narrow and functionalist view of the discipline. And also, in this framework, there is a need of providing accounting education that is coherent with technical and technological changes and also globalization. And nowadays we can add sustainability and social programs. That's what is the framework of the study that we have developed. And now Susanna is going to explain the main motivation and the findings of the paper.
Thank you, Isabel. I think it's my turn now. Good afternoon, everyone, and I would like to thank the World Bank for the invitation to be here in this afternoon in this very interesting meeting. The first thing I would like to correct is that Isabel mentioned that our study was published in Public Money and Management. We have other studies in Public Money and Management. This one was in a different journal, International Journal of Public Sector Management. And as Isabel just explained, the motivation for this study was to understand what countries teach in terms of public sector accounting, because once we are, most of us, moving towards IPSAS or an IPSAS-based accounting. So the idea is if the accounting systems tend to converge and be harmonized, the education of accounting, of public sector accounting, should somehow also be consistent across Europe and across the countries. Moreover, we would like to know how the institutions, the universities and classical and technical universities were preparing the students to these reforms of public sector accounting that are happening across our countries. So we use the study involved Germany, Portugal, Spain, and Italy. And we use a survey sent to universities, classical universities and technical universities. And the idea, the study, the questionnaire was sent in during 2017, but the results, the findings are still updated, and we are doing a second part of the study now that Isabel already mentioned, focusing particularly on master studies. And I will explain why. So the idea was to understand, to derive comparative findings. Next slide, please. Yes, so here are some numbers from our study. I'm not going through all of them. I will highlight some concerning Portugal and Spain. These are essentially the cases we are here presenting. So there are not so many entities, universities, offering degrees related to public sector accounting. We sent, as you can see, 18 questionnaires to Portugal and 25 to Spain, and the answers received were quite high in terms of percentage. And what we found is that at bachelor and master level, about 23%, there are about 23% of degrees focusing on public sector management, I would say financial management, which includes accounting issues in Portugal, and in Spain, about 50% of the universities that replied present these degrees. And the average number of students, they range from 40 to 150 in Portugal and from 15 to 100 in Spain. This means that the larger group of students are students from bachelor. Usually masters are smaller group of students. Next slide, please. So, and what we found also is that even if countries that do not have a whole degree on public financial management and accounting, at least they have one discipline, one course about this topic. And in Portugal, this was the case of about 70%, in Spain, 78%. And the number of students in this particular course, you can see in the table below, the lower table, that, for example, in Spain compared to Portugal, both in Spain and in Portugal, the number of students enrolled in this type of courses per annum are not very high. They range from, I would say, 40 to 80 students per annum. And in the case of Portugal, there is one exception, also in case of Spain, where there is, for example, in the case of Portugal, was a whole degree that is offered on local government financial management. And in that case, there are more than 100 students enrolled. Next slide, please. But what we found is that even if we have disciplines, we have one discipline, one unit at least on these topics, what we found is that in the majority of the countries, that unit, it's not compulsory, is elective, is optional, which means that perhaps public sector accounting still do not have the central role that should have. And this is related to what Isabel just said about the attractiveness of public sector accounting, that for many students may not be so attractive as business accounting. As to the content of these courses, we also asked whether IPSAS were being taught. And in most cases, yes, and I must underline that the case of Spain is a fake zero, because Spain does not teach IPSAS per se, but the Spanish accounting system, as Isabel will explain, is IPSAS, is based on IPSAS. So they teach indirectly, they teach IPSAS through the national standards. And this is the case also in Portugal. But perhaps the respondents did not realize what we meant with this question. But the truth is that somehow IPSAS are addressed in these courses. Next slide, please. And in cases where there is not a specific course on public sector accounting, universities tend to offer seminars or webinars on these topics, which show some importance that is starting to be allocated to public sector accounting, but not at a regular basis. On the other hand, if the students want to carry out a thesis, want to develop a thesis and develop research on public sector accounting issues, they are completely allowed to do it, as long as they have, of course, a supervisor to help them with this. And finally, next slide, please. In comparative terms, what we saw is that in the majority of the cases, the course of public sector accounting is included in degrees that related with business accounting or public administration. And in most cases, in most countries, the 4 countries that we study, except for Italy, they are optional, they are elective courses. On the other hand, there is still some diversity among the countries that we studied, because the number of credits and the number of hours in those courses, they vary a lot, between 30 and 60 hours and between 3 and 60 credits. And IPSAS are explicitly, per se, taught only in Italy, whereas in Spain and in Portugal, they are indirectly taught because our systems are IPSAS based. Next slide, please. So, in summary, our study allows us to draw some interesting conclusions and implications for practice. We realize that public sector accounting has been included in higher education institutions' curricula progressively, and lately this integration has been improved, meaning that the public sector accounting has gained importance, but there is still room for improvement. And we may say that there, and in the case of Portugal, we didn't change much compared to this study a couple of years ago. There is a clear lack of studies, of study programs specifically on public sector accounting and public financial management, at least at bachelor level. This study that we started now at postgraduate level shows that at postgraduate level, masters, for example, is a bit different. And some schools have a program, have planned, they replied to our survey, that they have plans to introduce these type of courses, public sector accounting courses in the future. However, what we can still see is that there is a small number of students compared to other courses, of course, in business accounting, and also a limited number of scholars. In each country, there are only a few professors on public sector accounting. So we can say that public sector accounting discipline is not fully developed yet as an autonomous branch of accounting, like the case of business accounting. And as our colleague Jan Zeiling said in his publication for IFAC, public sector accounting deserves to be a discipline of its own right, to be created as a body of knowledge, because it's different from business accounting. Like it is, what we think is that there is a risk of, if the scenario continues like this, there is a risk that in the future, institutions, professional institutions and public services, they need students with the knowledge in public sector accounting, and they will not have enough people with that knowledge. So they have to rely on their own existing workforce and training on the job and upskilling. And in this point, there is great importance of the professional institutes. On the other hand, another important implication is that there should be more collaboration between academia and professional associations and financial management officials in order to encourage students, to persuade students to come to become public sector accounting professionals. And in terms of education and our study, I finish here. However, I ask to go to the next slide because I'm starting with the particular Portuguese case. Okay, so in the case of Portugal, Portugal is a continental European country. We are a very small country, as you know, very centralized, with a very strong legalistic tradition and following the administrative law model. And therefore, accounting standards are compulsory. They are passed as law. So our public sector accounting system is law currently. And the influence of professionals, it's not so strong as in the Anglo-Saxon countries. We have a standard setting committee, specifically that we have a big commission that is divided in two committees. One committee works on the standards for public sector accounting, the other one for business accounting. And even if this committee is independent, it works under the Secretariat of State of the Ministry of Finance, because in the end is the Secretary of State that passes the standards as laws. However, in the standard setting, when we make our regulation, in this case our accounting standards adapted from IPSAS, the Committee for Public Sector Accounting, we have several stakeholders. So it is a participative process, for example, where there is a representative of universities, higher education institutions in accounting. They are one of the members in the standard setting committee is a representative of universities. Another member is a representative of the Accountants Institute. Another member is a representative of Budget General Department or Local Government General Department, Institute of Statistics. So there is several stakeholders represented in the standard setting process. Currently, well, since the 90s, we introduced accrual accounting, and our accounting has followed the business accounting model like IPSAS have followed IFRSs. Currently, we have the SNC-AP, the System of National Standards for Public Administrations, that was also derived from our SNC for business accounting. And basically, this means that we are very close to IPSAS, so we are IPSAS-based, which have been, as you know, derived from IFRSs. And this means that we have, since the 90s, we have introduced financial accrual-based accounting and reporting, but we still have, at the same time and working in parallel, budgetary cash and commitment accounting and reporting. Next slide, please. Again, go again. Okay, stop there. So our current public sector accounting system, and we teach this system in our universities because this is what our students have to deal with when they go to practice, involves 3 subsystems working in parallel, all using double entry system. We have budgetary accounting and reporting, which aims to report about how the budget is accomplished, and this is still modified cash-based, I would say cash and commitment-based. Then, in parallel, we have financial accounting and reporting, and also management accounting, that in the case of financial accounting is IPSAS-based. We use cost and market value. We have accounts, a chart of accounts, you will see in the next slide, and we prepare the balance sheet, income statement, cash flow statement, etc. in accrual base. And furthermore, we have also cost and management accounting, where not yet completely implemented, we are still working on the management accounting subsystem, but this subsystem in accrual base allow for entities to understand the costs of service provided. For example, municipalities or hospitals, they already use management accounting, accrual-based accounting. Next slide, please. Again, okay, thank you. And currently, our accounting system has 27 standards, 25 of which based on IPSAS. So they are 90 or 85% IPSAS with some adaptations to the local context. We have 1 standard for small risky entities, a simplified regime, even though it is accrual-based. We have a conceptual framework and a chart of accounts. And we introduced on the beyond IPSAS, we introduced 2 innovative Portuguese standards. One precisely providing guidance for budgetary accounting and reporting, cash and commitment based, and the other one for management accounting. And the chart of accounts allow us to also do the inventory, so not only recording the transactions, but also do the inventory of assets and also the link with the national accounts system, with the GFS, Government Financial Statistics. Next slide, please. Okay, so what do we teach about this system? Because as I said, we teach what the professionals need. So in terms of education, of course, there are the universities and polytechnic universities that teach accounting. And as Sheila just presented, nowadays, the Chartered Institute of Accountants, they recognize the degree and the preparations the student bring from the universities. And the only course they have to do is on ethics, unless professionals have different type of degrees, not acknowledged by the institute, and in that case they have to do training and they have to do different exam. So there are professional training, very important, offered by the Chartered Accountant Institute, and also long life training, because even when professionals start working, they need to keep updating, and this is to the Chart of Accounts to do it. We teach bachelor and master, we teach public sector accounting in bachelor's and master courses, and each course is 1 semester and usually 6 credits. As I presented in the study, and this is also the case in Portugal, that most of the studies, most of the degrees only have 1 or 2 courses on public sector accounting, especially at the master level, and there is not 1 degree, 1 whole master in public sector accounting. No, this does not exist. And as I said, we teach our national standards because the professions will need these. And so the way we teach, and if we teach several units, we divide in the same way that we do in business accounting. For example, we can have courses on financial accounting, public sector financial accounting, either for single accountants or consolidated accountants. We have courses on public sector management accounting, on public sector financial management, on public sector auditing, and of course on public sector budgetary accounting, which is very important. And sometimes there are particular courses at postgraduate level for subsectors of public administration. For example, we will offer courses only for specialized on municipalities or on universities, or accounting for universities, hospitals and health sector, for example. Unfortunately, sustainability accounting and reporting is not yet in our syllabus. Next slide, please. So in my case, and I finish with this and the next slide. In my case in Coimbra, I teach 1 course of public sector accounting that is 30 hours and 6 credits in 1 master of accounting and finance. And this master is essentially on on business accounting and finance. So my objectives, and then you will read the slide, are basically to introduce the students to the world of public administration and public sector. Not many of them know how public sector works, how public sector accounting is different from business accounting. And so the objectives and learning outcomes of my course, that is a very short course, as you can see, it's 10 weeks, 3 hours per week. And I tend to emphasize the aspects that are different from public sector, from a business sector, I'm sorry, and essentially focusing budgetary accounting and reporting and financial accounting. I don't have time to teach the management accounting subsystem. Final slide, please. Next slide. Okay, this is the program, my program outline. Can you click again, because there are some figures I would like to come? No, again? Again, okay, thank you, like that. Oh, no, here, okay. So, as you can see by my syllabus, I start the course talking about accounting harmonization, public sector accounting harmonization. So the first lecture, the first lesson is about IPSAS, EPSAS as well. So I try to introduce the reforms that this new system that we have in Portugal from the international perspective. In fact, SNCAP is based on IPSAS. So the students have to know what are IPSAS about and how this international harmonization. We are required in my faculty to link our course to some SDGs. So you can see here that I linked my course to SDG 8, 16, and 17. And in terms of bibliography, the main bibliography are the national standards that are IPSAS based. And occasionally I use some international books and papers because students also do assignments on special topics. For example, they study and we discuss about controversial issues like heritage assets or management accounting issues. Even if I don't address management accounting in the course, they can do assignments and the students go and study by themselves and then they come and present to their colleagues. This is the case of Portugal. Thank you. I now pass to Isabel to finish. Thank you so much. Next slide.
Thank you very much, Susanna.
Thank you, Susanna, for the nice presentation, because at the end, as I will say, the situation is easy for me, because at the end, the case of Spain is very similar to the case of Portugal. But we started teaching public sector accounting in my university in 1991. So a long time ago. Of course, at that moment, we didn't have IPSAS, we didn't have, but Spanish government have already started with public sector accounting using accurate accounting. So what we saw is that was necessary to introduce this new orientation for professionals due to the modernization and standardization of accounting in the public sector. And that creates, at the end, demand for professionals in this field. So we started very early teaching this subject. And please, next slide. About the context, what is the situation of public sector accounting in Spain, that it then it defines what we are teaching at the university, because of course we are preparing, as Susana told, professionals working for Spanish public sector administration. So we are teaching the standards that are at the moment in vigor for different type of administrations. As Portugal, Spain is a continental European country, and accounting standards are compulsory. And an important issue is that the accounting profession is, the influence of the accounting profession is very weak, because at the end there is a national body, the international de Intervención General de la Administración del Estado, a public body, who passes the accounting standards and are compulsory for all public administrations. We have a common umbrella that we call a General Plan of Accounting, and then from this general umbrella we develop different adaptations for local government, for central government, for regional governments, for health service entities, and so on. And another important issue is that there is a duality of system. The actual financial statements coincides with a case-based or modified case-based budget. Then that's what we include in our university studies in public sector accounting. Can you go to the next, please, to the following? At the end, what we have is we did in a reform that started to be implemented in 2011 for central government and 2015 for local government. And in the reform, what we did is trying to include all the changes that have been included in business accounting after the European regulation that includes the obligation for groups for consolidated accounts to follow international financial reporting standards. So there was a change in business accounting standards. We did a change because one of the main characteristics of public sector accounting in Spain is that we always follow what happens in the business sector. So if the business sector changes, we change also in the public sector. So After the change in the business sector, we decide to change also in the public sector. But at that moment, the public body said, okay, but we have also international standards for the public sector, and they include in our national standards most of the IPSAS that were in vigor at that moment. So at the end, most of the accounting standards are based on international standards. This is included in the next slide, please. That at the end, what we have done is an adaptation of the IPSAS and also of the business accounting standards to the public sector with a new general governmental accounting charter. That is what we call general accounting plan, general accounting charter, and from this we do several adaptations. But it was also a good opportunity to include the IPSAS in our national standards. And the situation is not exactly this. Please, the next slide is not exactly the same that in Portugal. We have also 3 subsystems, but we don't have management accounting. Instead, we have national accounts. What does it mean? We don't use at micro level the European system of accounts, but for example, for local governments, the requirements for the control of debt and expenditure are based on the European system of accounts, that is, on national accounts. Because of that, local governments need to use these systems, but they don't apply directly. What the Spanish public body did is to do like some conversation, explain how to convert from budgetary accounts to convert them to national accounts, more or less. That's what we have. And this third system is used for the control of debt and expenditure, deficit and debt. Okay? So if we go to how, please, can you move to the following slide? If we move how we teach public sector accounting in Spanish universities, I think that one different issue from Portugal is that we have in Spain a specific degree that is not on public sector accounting, but it is on management and public administration. Then, in this degree that is focused on preparing professionals for public administration, not only in public financial management, but also in economy, in macroeconomy, in different topics, public sector accounting is a compulsory subject. And there are, at the moment, 21 universities out of 50 universities that have studies in management and public administration. Furthermore, on the degree on economics, business administration, and accounting and finance, there are several optional syllabus or courses that can elect the students. Also, in master programs, they can study public sector accounting, for example, in the masters in auditing, but there are differences between universities, or in the master in accounting and finance, also with differences between universities. There is public sector accounting is an important area for research in several Spanish universities. That means that there are a lot of doctoral theses that deal with public sector accounting. Next slide shows how is, for example, the situation of teaching public sector accounting in different degrees in several universities. Not all the universities include public sector accounting, because some universities or have not identified the need to include them, or have not professors that are prepared for teaching it, but several universities have included, sometimes in business administration, but as you can see, not in many. In the case of the University of Zaragoza, we have included it in business administration, in economics, and also in accounting, in a special degree, in accounting and finance as optional subject. They can, the students can elect or not this subject. In the following slide, please, next slide, we can see how we prepare in different degrees. In most of them, as we saw, is an optional subject, is except in the bachelor degree in management and public administration. In all the cases, the subject has 6 CTs, and we teach 60 hours in all the cases. The next, please. For example, in public sector accounting in bachelor degrees, these are the objectives. Most of them are related, to explain or to teach about what is the situation of public sector accounting, what are the standards, and about all to teach some we focus mainly on the differences between business accounting and public sector accounting, because when we teach this subject, that is in the 4th year of the degree, they already have taught a lot of courses in accounting, financial accounting, management accounting, consolidated statements, so on. And also we relate the subjects with a specific SDGs, and you can see them on the slide. The next slide just try to show an example of the learning outcomes of all the subjects in the different degrees are very similar. Their learning outcomes are focused on preparing our students in competencies for accounting, measurement, for the main operations of expenditure budget, revenue budget, that, as we said, are connected with financial accounting, so that there is, at the same time, we have the modified cash system and the accrual system are connected, but we have just one program that connects all the operations, all the accounting operations. And also competencies for analyzing financial statements. The financial statements are based on the IPSAS 1, and also understanding at the moment what is the relevance of sustainability and non-financial reporting in the public sector. Can you go to the next one, please? That I'm going to finish. Just this is the sample of the topics that we teach in one of the syllabus. We start with accounting standards for public administration with a reference to national standards, but also to international standards. After that, we move to different areas of accounting elements: expenditures in the budget, revenues in the budget, property, plants and equipment, accounting and reporting for financial debt, non-budgetary operations, financial statements, public sector auditing, and finally a reference to non-financial reporting that is not only for us sustainability reporting, but we try to focus mainly on performance reporting that is so very important in the case of public administration. So this is what we teach, and as I said, there is a combination. Usually, please, can you go to the next slide? We teach in total 60 hours. Half of them are theoretical classes and half of them are practical classes with, it's supposed that they have also personal study of 90 hours. And just to finalize, to show what is the situation at the master level, please, next slide. In the master level, we also teach in our university, in different masters, the public sector accounting subjects. For example, in the master in audit, we have also a master in sociology and public and social policies, a master in the European Union. So we teach in several masters this subject. Just finish. I want to finish with the last slide, please, where I have included a reference to the requirements for certified chartered accountants and auditors on public sector accounting. I must say that public sector accounting is not compulsory for certified chartered auditors in Spain, because audit of public sector administrations are developed only by public sector auditors, that is, supreme audit institutions. And public sector accounting is now included in a requirement for certified chartered accountant, that is not the same that chartered auditor, a new qualification that is recently created, but that at the moment this qualification is not compulsory to be accountant in Spain. The situation here is a little different to Portugal. And thank you very much for your attention. Now I want to finish because also we have finished with the time. Thank you very much.
Thank you very much, Isabel. Thank you so much, dear Isabel and Susanna, for your very interesting presentation. You really managed to address all the questions that we asked you to address before the session that we discussed. And so now we have one more speaking, and now fasten your seatbelt. We are moving to Norway.
Thank you. Thank you very much, Natalia, for inviting me and sharing this experience. I know that we are almost done for today. I'm very happy being a dessert for today's day. So let's be efficient in time. I will try to give the most important things that I have been experiencing in actually studying and teaching at Nord University in Norway. So I just will give a quick overview. It's a very short presentation of because I will be talking mostly about my specific field. I'm a course responsible and teaching IPSAS course to international cohort of students. So this is very important to clarify because this is an English taught course, which is 7.5 ECTS. And I will be explaining why it's so interesting, because we developed this specific course, IPSAS course, based on our longitudinal cooperation with Ukraine. So just moving, not to give a very big overview, just moving to the last line here. In 2014-15, we have, together with our colleagues in Norway, we have worked out with our partners in Ukraine to identify which actually needs are the most relevant for Ukrainian society to pursue European integration. And based on that, this specific course, which is IPSAS course, has been developed and implemented for master students from Ukraine coming and teaching and studying here in Norway. So basically, this course is open to anybody to apply, but Ukrainian students, they take them specifically to have this competence and knowledge when they are coming back to Ukraine after they exchange semester. So this is the most important. The project, which was actually developed in 2016-19, was dedicated to establishing a joint master program in public sector economy education between Norway and Ukraine. So within this specific program, we are delivering these courses. So this is the structure of the program, and why I think it is very, I would say, relevant and interesting that I'm sharing this specific experience, because this is something what we were working specifically in Norway to address our target audience, which was the Ukrainian public sector, future public sector accountants, auditors, and those who are willing to integrate and continue working within the European Union integration idea. So the course which I'm responsible is public sector accounting and financial reporting in accordance to IPSAS. And this is taught during the first year of the master program, which is basically integrated when students are coming there. In addition, we are also serving them performance measurement in the public sector, risk management and internal control. And we also have a very specific course, which is directed towards high north, where our university is located. But at that point of time, this program is still valid. And I would like to say that on master level, obligatory and open to public sector economic students only. This is the last year, this is the last study year, 2025, for students to take these specific courses. Because now we are facing a restructuring of the master program, which will apply from the next year. So from the next year, we will have the course, which is public accounting and financial reporting, which will be a sort of offered as an elective course, but still for master students coming from Ukraine, it will be an obligatory course. Now it's open to all students, so I expect that more students from Norway, and also I know that we will already have several enrollments from Brazil to come to Norway and to take these courses. So it seems to be quite popular and very useful. Just to mention quickly, while the students, they are following the same program, they receive upon completion 2 diplomas, one from Norwegian higher education institution, one is from Ukrainian one, and they deliver a master thesis based on the selected topics. I personally supervised several master students who were developing theses also on IPSAS adoption in Ukraine and also on different public sector financial management and accounting practices in developing economy. So I would say that the content of their master theses are very good, and they have been evaluated with the highest grades, and they are developing this master thesis in English and deliver it in Norway with a joint defense in the end of their study program. So now it will be more or less the same. The students will go within the same program, but now it will be elective. And when it comes to basically the restructuring of the program, why Norway is actually facing this, I think it's very important to mention here that while we are all talking here of the need of public sector accounting, new reporting standards, and we were just talking 1 hour ago that the standards are growing like molecules in our field, we actually face a substantial crisis at universities, facing very little students interested in applying and taking accounting Master of Science in accounting programs. And also we are actually having this very limited interest in universities to deliver these programs because they're quite extensive and then require a very substantial competence from the faculties. Since we have much diminishing number of PhD taking PhD in accounting, like it's possible to have accounting as a specialization. The research is done less, PhDs are going less associate professor doing this work, and after that we have less students and capacities. So my colleagues from my universities have developed and published recently an article about the extinction of accounting in Norway, about public sector accounting as a profession in Norway, warning why this can be a problem in the future. Just to say very shortly about this one, because I think this slide looks very peaceful, but it's actually a crash point at why our university needs to do actually stabilize all Master of Science in Business programs so that also students taking accounting specialization, I will tell about it a little bit later, they need to be integrated and like all students taking similar courses within. So you see that there is this sustainability, global perspectives on sustainability, which actually specifically addresses this direction on sustainability reporting, et cetera, et cetera. So there are specific some evaluation profitability analysis, which is also offered for accounting students who are taking Master of Science in accounting, not in business. So what I'm saying that the programs, they're being merged so that more students are sitting together. So basically why there is such a big challenge regarding specifically public sector accounting education, I would say that first of all, a Norwegian institute in Norway, we also have the hybrid system of public sector accounting, combining cash and accrual as together. And these practices, they really diverge from what is going on in the private sector. Being a sort of accountant, what I would say about some different statistics that I found is that the number of central and local government accounting related courses in 2010, it was 53 courses overall within whole Norway. And in 2022, it became 18 courses that were studied for the students. The number of students completing these courses in 2010, it was 500 students approximately, and in 2022, it was less than 100. And I would say that within this less than 100, we have around 20 Ukrainians that have submitted, completed these courses, because this course is also going to national statistics. So I would say that it's a really big challenge what we are facing, and we need to remember that less education will cause substantial problems for public sector institutions that will have to teach from scratch and people who do not know anything. I think at this point of time, what we can do is rethink how we can cooperate effectively to make specialists studying at universities and doing relevant activities at universities, because before they go and deliver fail financial statements and they are overwhelmed because they do not know what SDG audit is, and then they say, I quit because I want to do my TikTok instead of other things. Because we are facing this Zoomer generation who is not really eager to stress themselves of different challenges. So I think this is something what is really important for us to understand. And what we are facing now, this is a evident development trend is going really down, but we can have a chance to reverse it as we want. So very quickly about IPSAS course that I am developing for international group of students. It's a quick update, not too much on the content side, is that I'm trying to combine both theoretical and practical parts. So the theoretical issues, they include different theories of addressing, of course, international practices, reforms. We are selecting different cases to analyze, cases of different European countries. What is the difference between IPSAS and IPSAS, how they are integrated, etc. So we also have the technical and empirical studies, and here I'm cooperating quite extensively with several colleagues, having a very big experience in working with IPSAS, so they are coming really from the field and doing some practical cases and practical studies, working with specifically liability and expenses, revenues, impairment assets, etc. So we are working with them specifically. When it comes to, because the inquiry for me to address initially for this presentation was about sustainability reporting within the course. And I have a special topic, special 8 hours related to sustainability reporting according to IPSAS, which has been developing. So we were, in a way, reading. I was providing some kind of insights, what it is, how it works, what is the difference, what are the difficulties. And if you ask me what kind of standards I'm using, basically I have the IPSAS B webpage always open, so I'm just sitting there checking for the updates, any notes, etc. So what is the most relevant and updated information coming from IPSAS-B is always with me. Of course, attending this kind of events, it's exceptionally important for academicians and practitioners to cooperate to actually develop future generation of accountants who are both knowledgeable, informed, and eager to work, because we are facing the challenge of people do not like public sector because this is something unsexy. So just quickly as statistics, because I'm running this course for 7 years already, more or less, I have 134 students completed this course. They are all coming from Ukraine. And also, we are doing all the time the assessment of the study cases, how the students perceived, and what did they like, what didn't like, and how they would like to say, what is their ideas, etc. So I would say that they all appreciate, they feel very comfortable. More students, they're all also coming from different backgrounds, by the way, which is very important. It's not an obligation that students coming, attending my course, they have a bachelor in accounting from Ukraine. They can have bachelor of anything, basically economic discipline. It can be management, it can be finance, it can be international relations, whatever they want, but they have this specific course and they are advertised to, they have no choice, they take it in any case, but it's for them to know how they will be using this tool further. Because as we found out, sustainability reporting and SDG reporting will not be something what only accountants have to do. It will be also other people coming from other spheres, and they are, of course, need to be knowledgeable. This is also from Norwegian context. This is very important because Norway is very eager, as I said yesterday as well, of developing and contributing to these standards. And also from our business school perspective, it of course institutionally very important to have these courses. I'm very proud to say that Nord University, which I'm representing, is one of the leading institutions in Norway delivering the programs in public sector accounting. So we are considered to be a very strong school in maintaining this tradition for a very long period of time. So now we are applying for this AAS a CSB accreditation, and this is a very nice addition to our university portfolio. Yeah, I think this was everything from my side. In case we have any time for questions, it would be nice, but I'm here also tomorrow to discuss if you would like. So thank you so much.
Thank you very much, Veronica. I hope that we still have our online presenters with us. And colleagues, we still have 6 minutes before the end of the session. So in case someone has questions, please raise your hand. And you can ask, yeah, Heike, please.
Thank you very much for interesting presentation, also for this very interesting research. We all understand that in many countries or all countries, the public sector accounting is mainly optional course. So I'd like to know if you have information or any kind of research about the demand of public sector accountants. So it's very important in order to understand, are we going to have enough students for the demand, or our students maybe are much more than we have demand in our countries? Thank you.
Would you like to take a question? Let us. I'm just quickly responding to from the Norwegian perspective very quickly, because in Norway, the education is very specific and strict in this way. To be accountant, certified accountant, you need to have education, and you need to also have own studies and post-studies training. It's an official requirement, and you can apply to be a certified. I forgot to mention this a little bit during my presentation, was a little bit too fast, but we have a specific Master of Science in Accounting, Auditing, and Sustainability, which is a requirement if you want to take it. Why I did not
focus on it that much because it's completely in Norwegian. It's taught for local people. It's quite popular, I must say, because the salaries are very competitive. So students, they like taking it, but they are not still very engaged in having it in a public sector domain. So they mostly go to the private sector. But it's also an idea, but in Norway, it's a very regulated. So you need to have it, otherwise you cannot practice.
Thanks, Veronica. Thanks, and colleagues, Isabel, Susanna, Sheila, do you have to comment something?
Perhaps I can add something on my perspective on Portugal. If I understood the question correctly, is do you know how many public sector accountants we need in the country? My answer is no. I don't think we know how many accountants we need. But one thing is sure. I mean, we are Spain a bit longer than Portugal. We have been reforming our accounting system, public sector accounting system, first introducing accrual accounting, like Isabel also explained. We followed actually Spain for 2 years later. They start in 91, 92, we start in 97. And since then, we need to prepare our professionals to be ready to implement and to use public sector accounting standards in public sector organizations. And especially now that we went for an IPSAS-based system, there are in some public services a few people that do not know about these standards. They are not exactly accountants, but they are chief financial officials, and they need to improve their knowledge. So, for example, I also have been participated in some postgraduate courses that are not actually bachelor's or master degrees, but they are tailor-made to improve the knowledge of people already working somehow with public sector accounting, but to upskill their knowledge. And of course, maybe Sheila wants to add something here. Before public sector accounting, when the Chartered Institute of Accountants required an exam, public sector accounting credits were compulsory to do that exam. Now, what the institute does is recognize the degree or the course that the student bring from the university already with some knowledge on public sector accounting. This is what I wanted to say. I pass to my colleagues.
From the OCC, we don't have that data and tell you the demands of the market. The OCC only knows about the course you've taken, and that's all.
Thank you very much, Stella. Isabel, would you like something to add? Can you hear us?
Yes, just to add that in the case of Spain, the regulation is different for auditors and for accountants, as I explained before. So for auditor is very regulated, and they need to have an exam. They need to be certified chartered auditors. But for accountants, now the government is trying to regulate, but has not been regulated before. Just this. Thank you.
Thank you very much. Do we have more questions? No more questions. I think we have run out our time. It's just 5 p.m. So we have one more. Thank you very much for this very interesting session. Thank you very much, Isabel, Sheila, and Susanna and Veronica for this very nice discussion. Thank you.